All right, and we are recording, and y'all hear my voice, so let's get started. So you see today here we have the pound dollar chart. We're looking at a 2 minute chart, and some of you are gonna say, "Wow, 2 minutes, that's really quick." Well, on a day like today, um, that's probably what we're gonna have to look at. As you can see, the market is pretty crappy. There's no great movement, but the time frame is not important. What's important is that you can process the information that's on that chart um, as fast as it comes out. So if you like the faster paced markets, then the lower time frames are better. You're going to get more frequency. You're going to get more losers, but you're also going to get more winners. Why? Because there's just more frequency of trading. That's all. It's not that the information is any less important or any less valid. Information is information, whether you look at a 10-minute chart, 5-minute chart, 233 tick chart, whatever, it doesn't matter. It's information relevant to that time frame. Okay, and I say that a lot because people like, well, I need to look at the 1 hour chart to get the daily trend, or the 4 hour chart, and then drop down to the 15-minute chart. I'm sure we can all agree that whether you look at whatever time frame you look at, the order flow on each particular time frame is going to be different from the higher one. That's just the way it is. So I can go like this and know that the market was heading down here and now it's correcting up. Why is it correcting up? Because this high has not been broken. Therefore, this is just a pullback of this main move right here. Okay, so that's all it is. This is the main swing on the higher time frame. This is a correction. It's that simple, guys. There's no need to go back 800 days and look at highs and lows. This is 100 people will have to agree that this is a high and this is a low. Okay, and so far we're making a weak correction of this. How do we know it's weak? Look at this. Okay, look at the momentum here, look at the correction. Okay, so it doesn't really matter, because if you can go back in time, you're always going to find a higher new structure high, new structure low, different from the one that you're looking at. You don't need to complicate your lives. This is the high, this is the low, this is the pullback. Can we expect a new structure low here? Probably that would be the overall global expectations, but that's not what we're looking to trade. If I'm trading today, I am primarily looking for trades that are in line with some downward price action. Why? Because that's what the market is telling me. The market is making a lower high. On the shorter term scale, it's made a retest of this high, and then it came down and made a new structure low. Okay, and now the market's trying to retest this high. That's not normal for this market to be doing this. We also have to consider that the market, it's not very conducive to trading today because of the holidays, because of the time of year that we're in. We're not dealing with a full deck, and structure is not going to be as strong, and order flow is going to fail on you, as we see here. Okay, but we'll get into all that later. Right now, I just want you guys to see that I can just crunch down my chart, look at the main swing, 100%, 100%. Everybody would have to agree that that's a high and that's a low, and this is the correction. Okay, so for the people that are trading longer time frames, we'll say, okay, well, prices come back. The 780, the 61.8 is trying to hold. Therefore, we're thinking a couple of things. Possibly an ABC to the downside. Possibly a Gartley pattern. Those are, from a harmonic standpoint, that's what you're looking at. Those are the scenarios that you're looking at right now. But I don't do that kind of trading anymore. The trading that I do is intraday. I'm looking at the smaller swings. I'm taking consistent short-term profits and not worrying about the bats, not worrying about the Gartleys, not worrying about all those things. I used to trade the higher time frames. I used to get into that. But I got tired of seeing these patterns either failing on me or completing overnight while I was asleep, since I live in the U.S. And it just became extremely frustrating. And the chart's just moving slower and slower and slower for me. So I needed something that kept me entertained It kept me with less exposure. So I started looking at the smaller time frames, and I just fell in love with the frequency. I fell in love with the price action. I learned to read the charts because back then I did not know how to read a chart. And I think most people, even professionals, do not take the time to learn how to read the charts. They become very dependent on indicators. They become very dependent on external forces that just keep you in the dark. And I think that the chart, once you learn to process the information, tells you everything that you need to hear. So we're going to get into structure. Okay, so just condense the chart a little bit. Let the chart speak to you. We see here that the market is struggling to make new structure highs. It's making deeper and deeper corrections. Here made a shallow correction, and then it made a weak new structure high, followed by a new structure low. Okay, on the overall though, we're still higher low, new structure highs. You can see you got a one-to-one there, and then we see the market very weak correction from that through the overnight hours here. This is and then it produced a short term a new structure low followed by a new structure high. So this is where most people get confused or disoriented between short-term order flow, longer-term order flow. But we don't have to get too involved. It's all going to take you to the same place, because whether we say, okay, here the market produced a higher low, what do we expect? New structure high. What do we expect? Higher low. Market produced a new structure low, right? So now we expect a lower high. The market produced a new structure high. So it doesn't matter, because when you realign yourself with the order flow, you will see that the market is going to correct, and therefore you, as you follow the order flow and you reestablish yourself, you will have a new expectation. Those expectations are going to be very likely to play out. Now, this is probably a poor example just because the price action is crappy, so I'm just going to go back in time to better markets, and then we'll jump into the current market and see if we can get into some trading here. I just want to move back. So we don't cheat. We'll go to this day. We know that the market is going to be above us. So okay. So we'll come here. So we'll crunch down our chart. We see that the market's pretty much sideways market. Within that sideways market, we have here a low, a high, a new structure low. We have a lower high. We have a failure to make a new structure low here, so we can only expect a new structure high. We get that new structure high, we expect a higher low to an area of structure. That is the most dominant structure there. So we can then from here expect a new structure high. So if we move the chart forward, we get that new structure high we expected here. We see that momentum is still decent. This is the momentum of this swing. This is the momentum is slightly less. Okay, we also see that projection from here to here was greater than from here to here. Okay, so we could expect a pullback to probably somewhere around this area right here. And I just want to show you how this process, it's not difficult, and how we can have accurate expectations. Price should come back somewhere in this range, and we use our ratios and say, where is the nicest area where price should come back to if this market and order flow is correct? Well, we see that we have the heaviest structure somewhere in this area right here, and we have the 138, we have the 50%, I'm sorry, the 38, the 50%, and the 61.8. We don't expect price to come down this deep. That would be atypical of this. We had a very nice run up. Very little from the bulls or from the bears to try to correct that. We see that they have their correction now. I expect a 38% retracement at a very swing minimum. Sometimes we don't even get that in very strong trending markets. well, I would expect price to fall somewhere within this range would be my expectation of a pullback. Price hits there, okay, immediately bounces off. That's a very good bounce. Now we know on the way up, what do we expect? We expect a new structure high. We expect price to have challenges somewhere here in this area because we see price bounce there, we see price bounce there, and it was able to get through it here without much of a problem. We do expect a new structure high. We do see an immediate strong bounce here. Let me make this a little fatter so you guys can see it. So now we expect price to make that new structure high. Notice I said price should get, I redefined my square and price came exactly to that and came up. And it's not that I'm a wizard or that I can see things or that I have an amazing insight. You have to be able to look at this and look at the structure and say, where is price going to have difficulty? Where is price likely to find that support or resistance that I expect in line with my expectation of a pullback? Okay, I didn't expect an overall deep pullback on this. Why? Because I still had decent momentum. I had decent projection, even though it was less. I expected to be a little deeper than the previous, so I expected it to be deeper than this. So if I take this swing, 50%, it's about the same. Okay, so now we'll see if we get our new structure high. Now we're starting to see a little bit of weakness. We don't get that new structure high yet. What does that mean? Just means we're in for a possible deeper correction, because if we're going to change our expectations long term, this low would have to be broken. Okay, so until this low is broken, my new structure high expectation still remains valid, but I did not get that new structure high off of the first correction right here. I did not get a new structure high. That's concerning. That tells me we're either in for a deeper correction or this market is changing directions on us. Okay, so if I got long here and I see this, I need to protect my trade. I need to get to a break-even point, so I don't, at the very least, I don't lose anything. Okay, so now where would we expect price to find support? Well, somewhere back in this rectangle. Okay, otherwise we've made a new structure, a lower high, and we expect a deeper correction, new structure low down into this area. Okay, so we see price is having difficulty trying to interact with this. Price is trying to find support, but it's not really doing it. So, on the short-term scale, it looks like we're going to get a new structure low here. Okay, and now we're starting to see that attempt for price to make that new structure high. Look at this huge rejection. Look at this huge move, huge attempt to take price higher that's met with failure. The bulls are very weak here. Okay, so now, although we have a lot of weakness here, we can expect price to get deeper on us. And it got a little deeper on us, not much. Now price is trying to correct again and follow long-term expectations. A lot of challenges up here, huh? There's a lot of resistance up in this area. Price is not strong enough. It's made one attempt, two attempt. Okay, what does that tell you? With every passing attempt, the price tries to correct and it's unable to do that. You have to start thinking now, well, I think this market is not going to be able to live up to the expectation. It's not going to be able to make that new structure high. And if it does, it should be a weak one. Okay, and that could be our expectations. And we'll see what happens as price moves forward. Okay. Now I told you that our expectation was for price to get lower here, to have a deeper correction or change in direction. We're seeing more and more evidence of that as price is making now what? Lower highs. Okay, we'll see if we can close below this. Wow, how frustrating. So what's happening here? Price is moving completely sideways. We're in a range-bound market. Here's a high. Here's a low. Price is not doing anything until it breaks out of that. So now you say, well, range-bound markets are untradeable. They're unreadable. You can't read them. People lose a lot of money in range bound markets. Well, there's no reason why that happens. We still have our boundaries here. We know the price is finding resistance here. We know the price is finding support, well, now here. But what is price telling us? Are we making new structure highs? Yeah, we made a very weak one here. We're making higher lows. Yes, we made a weak one here. So overall, what's the bias here? The bias is up, right? This market still intends to move higher. That's what price is telling us from a structure standpoint. We're not looking at momentum now. We're not looking at projection. We're just looking at order structure. Okay, and what we expect. I want you to see how structure plays out. We made a lower high here. Okay, so now our expectations for us to break to the downside from this rectangle. And does that remain my expectation still? Yes, because what happens here? We're really not breaking to the up or to the downside. But prices consistently, in a bullish market, prices failed once, twice, 3, 4 times, okay, to make that new structure high from here. So our bias is definitely for price to move lower and to start breaking to the downside. And there we go. You see how we came to that conclusion? And now, even though the market was range bound, even though the market was extremely difficult to read, our structure analysis led us to the proper conclusion. And then you could have swings that may take you out of that, okay? But until expectations fail, okay, your assessment and your expectation has to remain true. Now, we've adjusted our overall short-term expectation as to where price should go, okay? But our long-term expectation, I told you here that price was looking to break to the downside. Why? Because price should not have had any difficulty in making a new structure high off of the first one, the second one. Now you're talking about 3, 4, it's even harder. This is when price had the most strength, the most ability to make that new structure high. Okay? Price was unable to make a new structure low. Okay? You can barely call this a new structure low. Okay? Price again showed commitment, intent, and enough strength to be able to push up. Did it even make a new structure high beyond this? No, much less this one. So those were all ways that the market was telling you, okay, that further move to the upside was going to be extremely difficult for this market to achieve. And since the market tends to follow the path of least resistance, okay, you can then, by here, you can start making those assessments that price was going to eventually either break this low and have a very difficult time breaking these highs. You all follow? Could I change my cursor to an arrow? Sure. Better? If you were long, how many failures would you tolerate before exiting your position? Well, if I'm long, okay, the market, you have to assume that the markets are efficient. If there's anything that price tells us is that is efficient, once it picks a direction, it should move in that direction with very little opposition or resistance. So if I expect price to make a new structure, I expect it to happen the very first time it tries to. That's when it's the strongest. By the second time, now you need to start thinking about, well, it shouldn't have had this much difficulty. I do see the weakness. I don't expect a new structure low yet. However, this time I definitely do expect a new structure high. And if I don't get a new structure high from the first correction here, across, then I know I am in some real trouble if I am long here. And that if I didn't protect my trade here, I said I need to protect my trade. Once price didn't achieve that new structure, I need to make sure I'm at a break-even point and that I protect my trade. So I protect my trade immediately. I believe always in in capital preservation. That should be your first priority. You need to protect your trades. You can always get back into a trade, okay? But once price starts moving against you and you're in drawdown, then, you know, your back's against the wall and you start letting those emotions in that are going to help you make poor decisions. So protect your trade. If you get taken out, who cares? You can always get back in. But once you're in drawdown, it's hard to get that back. Okay? So once price failed the second time here to make a new structure high with even better momentum, which we're not talking about yet, but I just want you guys to see that. Better momentum here. We just had zero projection. Okay, I knew we were in trouble. I knew this market is looking to either change directions or head into a deeper correction. Okay, again, our expectation for a new structural high still remains valid. Why? Because this low here has not been taken out. If you look across, that low has not been taken out. Now we seem to be correcting. But in the short-term scale, we've made on a short-term scale, sorry if this is not completely accurate. I'm used to using the crosshairs. So we see that price did correct here, made a new structural low. In the short-term order flow, what are we doing? New structural lows, lower high, new structural low, lower high, new structural low. And we see here, okay? So let's see what price does now. Very deep correction, right? To the upside. So now we can assume that we're not going to be, it's going to be hard for price to make a new structural low below this. It's going to be hard for price to get past this area here. Okay? And do we have any structure in that area? I'm sorry, guys. I know you wanted the cursor, but it's easier for me to just look across like that so I don't have to draw a lot of line. There is some structure here. You know, price, this correction here should not get past this. Oh, and it does. There's an increase in momentum. There's an increase in projection here. So now we have to look and see that the next structure area is right here. Price, this is our overall structure. If this market is going to continue higher, okay, this has to be respected. Okay, we cannot close below this. Okay, price bounced very nicely off of that level. Our expectation now, since price does not make a new structural but tested these lows, would be either a retest of these highs or a very weak new structure high. You all on the same page so far? And although I didn't expect price to get past this, there was some momentum. Price did get past it, but didn't get very far past this. My overall expectations were for this to hold and for price to show some degree of respect to this level. Now, if we were to close below this down here, then we have to change our expectation. We're no longer expecting a new structure high. We tested 100% pullback to this swing, so our expectation of a new structure high is a little unrealistic, and we would expect some of these highs to be tested. So drawing a rectangle here in line with expectations, we would expect somewhere in this area. I know price already came to that. It showed what? It showed more momentum here. So we would assume price broke structure in the short-term order flow. So now this market is trying to live up to its longer-term expectations of the new structure high. Not going to happen. Again, we start falling into that. It was a bear trap because of momentum and then strong rejection. Okay, I don't look at things as traps. I just look at what is the market telling me. The market's telling me that, you know, momentum increased here, momentum increased here. There's volatility, but there's no direction of movement. We still have our expectations of that retest of these highs, and perhaps even a weak new structure high. But that's becoming, it's a complex area, and I'm glad we're seeing this because you can see how sometimes, even in complex area, you can still see what's going on. Price overall is what? Made a higher low. Price has had opportunity after opportunity to make that new structure low and it's failed, right? So far as making higher lows now and weak new structure highs. So although it looks like we're going to get that new structure low, the market on a very short-term scale is telling us that the bulls are still trying to hold on to their level here. They do not want price to close below this. Okay? And we have to see in the short-term order flow what's happening. Okay? And notice how we said we were still had a bullish bias to this, right? Bulls are still trying to hold on to this. We're making higher lows. Now we're making new structure highs, higher low, new structure highs. So we're falling back into the overall longer term expectations, and that is how you use a short term order flow to help you navigate through complex areas. What's price doing? Is price producing new structure lows? Is price producing new structure highs? Neither. Okay, what's happening overall? Are we getting higher, lower highs, higher lows? Price always tells us what it intends to do. In the short term order flow, there was an AB equals CD. Was there no possibility to take that long? Well, that depends on you and your trade plan. Where you decide to enter the market is entirely up to you, but you need to enter, in line with your expectations. If your expectation from here is a new structure low, then you should only be looking at shorts. And what happens if you enter, let's say here, and price makes a new structure high against you? You're wrong, right? It is a range market, so we're expecting breakout to the upside. Right now, I'm not expecting a new structure high to the upside. I'm expecting a retest of these highs, or a very weak new structure high, if that. I think prices had plenty of opportunities to make that new structure high. It would be atypical of this price to just blow through and close way up here. Can that happen? Sure, anything can happen. But would that be a reasonable expectation? And the answer from my experience, from what I do, is no. It would be unreasonable to expect price to blow through this and make a new structure high. It would have done it already. It would have done it here, and would most certainly have done it here. And then prices, increased strength to the downside, then attempted to, with this show of strength, it should have been able to make that new structure high here. Instead, it made a very deep correction near these lows. So it would be atypical, or not reasonable to expect price to just go ahead and just break through this with a lot of strength and momentum. Can it do that? Sure. At the end of the day, price is going to do what it's going to do. But based on the information that we have here, it would not be normal for us to expect that. Is this a situation where you would just watch and wait for more clarity? Yes, right now there's nothing in my process that would have me in a particular trade here. I will be looking for shorts up in this area and possibly looking for longs in this area. Right now, order flow is telling me, both short-term and long-term, that this market intends to head higher, but with difficulty. It's going to head higher with a lot of difficulty and possibly look to change directions. There's major breakdown happen here in the bulls, and we should eventually see price heading back to the downside. You see, we got another test here of these highs. Price is having difficulty getting past those areas. And now we're producing lower highs and new structure lows in a short-term order flow. So now what? Now you can say the transition is almost complete. We now can, have a very good understanding that this market is intending to indeed push lower. As you can see, can you all see how this is, how price is coming along, how we can have expectations, how we can follow those expectations, and how we can change those in real time and still be in line with what's happening? We already knew here that we could expect a weak new structure, a retest of these highs. We identified the strongest structure in this area. Look at here, high, low, across, see, respected, 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 respected. Now this market was heading higher. Should it take 1, 2, 3, 4, 5, 6 attempts to break through that? That is how being empowered traders, being informed traders, being traders that can read a chart, now we understand that if we're long, whether we're long here, whether we're long here, if you're long here, you're in trouble. Price closed against you. This is where you hope things turn. No, there's no hope in here. We don't trade with hope. We read the chart and we let the chart tell us what's happening. So now price came here. Definitely after this attempt, this momentum, all of these higher lows, higher lows, higher lows, higher lows, you know, no chance to get up here. Now we automatically, I mean, even though our expectations for retest these highs, which happened once and twice, or very weak new structure highs, now becoming an even less of a possibility, we now need to shift our expectations around and say that we are expecting for price to push lower and to get past this area right here. Price should be able, from an expectation standpoint, price should be able to get past this area right here, because it can't keep going up. I mean, it's had so many opportunities to head up and ahead. Now, does that mean we can't get a new structure higher? No, but we have our expectations. Our expectations now have us looking for these lows to be taken out. Okay, and now we respected this. Price showed some momentum, showed some increased strength, has showed an ability to still get back here. So we now have to conclude the same thing that we concluded here, that we are in a range bound market. This is our range right now, but what is price overall? We've produced a lower high, and now we've broke structure. We've tested back into these areas. This low has still not been taken out. It was respected here. It's a higher low. So now we have to say, well, our expectation that these lows be taken out and for price to move on lower is still a possibility for me. It's still within my expectations. However, price has come up here, has gotten into these levels here. We have to wait and see. With this strength, it should break higher. Well, I wouldn't say that, you know, it does look like there's more strength. It does look like there's more momentum here. But my expectations still remain the same. This low was not taken. This low was not taken. My expectation was for a retest of these highs. It got retested here. We are in a range bound market. We have to see how price deals with this area right here. I don't expect price to get up in here. I still stay to the expectation that price overall wants to get bearish, wants to break these lows. That's what price wants to do. Right now, price is speaking to us and saying, no, I can still go higher. I've made a higher low here. I increased my momentum a little bit, but I don't expect price to just blow through this area. It's had so many opportunities to do so. We'll see what price ends up doing. Okay, and price now breaks up here. I still don't expect a very strong show of strength way up into these areas. We do see we have a little round number here, but it would not be very normal for price to just go ahead and get way up here in this area. Overall, so far we've produced a very weak new structure high. We see price came back to these levels here and it's showing some support. So we'll see if price can break these highs. That would be the expectation now from a short-term perspective, for these highs to be broken. Okay. As you can see, my overall expectations were for price to try to head lower. And although this happened, and although this occurred, and although it looked like they had shown a show of greater strength and commitment to do that, my expectation didn't really change. I knew we're in a range-bound market. I knew we were going to test these highs. But if price was very strong and very committed to follow long-term expectations, it would have done it like we talked about already here. It shouldn't be trying to do that here. This is what some of you may call a trap or a false breakout, or one of those situations where, you know, the retail traders are waiting for, you know, a close above these highs here to go long. Okay, and notice they would be in a world of pain right now. This is where expectations play out. And even though on a short-term scale and even a long-term scale you got a weak new structure high, you use all of this information to help you navigate. I knew here, okay, that price was looking to get back lower. I knew here that price was looking to break these lows. Why? Because we shouldn't get 100% pullbacks. We shouldn't get this much involvement from the bears to try to keep price lower. This is not normal with expectations. Now, have my expectations changed? No. Did I say, okay, now I expect a new structure high? No. I remain true to my expectation. And although this happened, this was insignificant to me. Okay? And all this means that we have such a weak new structure high that we were going to get a deep pullback. So we got a 100% pullback. Is that normal? How do you use trend lines now? That price almost hitting the third point on a forming trend line? No, I don't really care much about trend lines. I just look at the order flow. I know what you're saying. You're saying this, right? Doesn't matter to me all this much. Would you take a short at the false breakout? No. If I was looking for a short, I would look for a short somewhere up here. Okay. Well, I haven't zoomed into the chart to say I might have been looking for a short somewhere around here. I can't say that now because right now I'm just looking at structure. I'm not processing entries. We'll get to that. I just want you to see how expectations play out and how you can always have an expectation and how those expectations change as more information becomes available. Okay? Do you all see how I've been able to do that, and how even when things are not 100%, your expectations can still remain in effect, and how you can still have a proper alignment of where price is going? So this is a new high, qualifies as fake and weak new high, and you expect bear strength. I wouldn't say that I expect bear strength, but I do expect deep correction here. Okay? And now that I see that price should have been able here, okay, to make that new structure high. I said that when this happened, right? So price increased strength to the downside. Now we know we're in for that deep correction, right? Now we know that the bulls are in trouble again, and now we know that our expectations for these lows to be taken out is becoming more and more of a possibility, right? What do we do here? We broke structure, right? Price has been unable to close below this for some time. Now price showed that it can do that. That's the market speaking to us. I want to go lower right here. Okay? Price still respected these lows. Now I expect a lower high somewhere in this area right here. I would expect price to have difficulty getting past this area right here. And it didn't. Okay, what's the next level? Up here, right? Price should not be able to get past this area right here. This rectangle should hold, right? Okay, so this was our initial area, and this was our secondary, right? If we draw fibs on here, which we'll get into later, you'll see golden zone, right? Price respecting the 618. You know, it's when you start adding the other tools, it becomes even more easier. I just want you to have a global expectation, right? Lower high, new structure low, right? Market speaking to us. I want to go lower. That means this high cannot be broken. What is our first line of defense? Right here. Secondary, right here. Price got to the secondary, and then came down. Was unable to make a new structure high here, right? Off of this high. So what? Confirmation. Where can it go? I can only go down. I can't go higher. Now I can't go higher past this. Those are two very clear signs. I can only go lower. Price made a new structure low. Okay, now what's happening here? We're falling back into this complex area, this complicated area. Now price said here, I confirmed lower. Now I expect a lower high, I expect a new structure low, very weak. What do you expect? Deep pullback to this, right? You got that. What do you expect? Retest or new structure low. You got a retest of these lows. So now, again, you're tightening up, but what's order flow telling you? Higher low, I should be able to make a new structure high past this area right here. Okay, I still have structure here. Okay, overall, what I'm expecting, I'm still expecting a new structure low, right? Because this high has not been broken. This low has not been broken. I'm trapped in here. But since I'm trapped in here, what do I expect? Well, I expect for price to make a new structure low. Why? Because I have not broken this high. Okay, price got down to these lows again, was unable to break that. My line here is still good. I have not closed above this, so my expectation is still what? New structure low, right? Now we can play this game for hours and hours and hours, but until price doesn't show a commitment to close above this area, I have no need to change my expectations. I know that with every passing swing that price does not make a new structure low, my expectations weaken, and I need to look at that very carefully. But until this high is broken, I can only go lower. And until this low is broken, I am trapped. Okay, so price is moving sideways within this high and this low. There are both deciding factors as to where price wants to go long term. Okay, but am I making a new structure high here? No, definitely not here. Okay, I am making higher lows, so that tells me that I should expect price to be able, okay, to close above this area. So my next area of interest remains this rectangle again. Okay, if my expectations are going to hold, okay, that price is going to break past these lows, okay, then this rectangle needs to hold. Okay, and although price spoke to us here very weakly and said that I intend to climb higher, okay, all the information here told us that this could happen, but it was unlikely a price was going to get way up there. Could I still be wrong? Yes. Could price still get up there? Yes. Right now it's telling us I want to head higher because I produce a higher low here, and now I should be able to make a new structure high here. But overall, what should happen? If price is going to head lower and the bears commitment here to try to keep price from climbing is going to hold, this is a very important attempt for them to stop the bulls. Okay? Two opposing expectations in play. Somewhat. To make sure I'm following you correctly, the fact that we're seeing 100% pullbacks is a clue that price will most likely move lower. Yes, absolutely. Two opposing expectations in play. Yes, I mean overall you would see that you would expect a new structure high, but we already have enough information here to see that that scenario is very weak. Okay, but yes, we see a higher low here, we see an even higher low here, we see a weak attempt here to make a new structure high. We see that if we are correct and to assume that the bears are definitely trying to take this market lower and the bulls have not been able to already take price higher, we have to be changing our expectations to be looking and considering the price will in fact make a new structure low versus a new structure high. Those are two different expectations. You are correct, but my bias is for the bears to be able to make that new structure low. Why? Because it shouldn't have taken the bulls all of this time, okay, to make that new structure. Look at all they've been able to achieve. Okay, so because of that, I am not expecting. Where were we? I don't know what we were. There, we were there. Okay, so right now, if we are correct here, price has not been able to show a lot of strength and commitment to keep going higher here. Okay, so as time progresses, as more information becomes available, we see that a more likely scenario is for the bears to be able to take this market, okay, and to push it lower. Do y'all see the same thing? Okay, so as we progress here, we see that the bulls have taking price a little higher. The bears were not able to correct here. We're retesting these highs. Now this is extremely important for the bears now. If the bears are going to do what they wanted to achieve here, they need to stop the bulls right here. They cannot accept the bulls to close above this area. Okay? If they do, our expectations of that new structure low, okay, have to change. Okay? So now we look at the short-term order flow. We see that we've had this situation. We see that we're extended beyond a 1-to-1 here. There should be a high level of exhaustion for the bulls. We see that we have structure. This is a good opportunity here to, look for shorts somewhere in this area right here. Okay, how did I know that? How did I know that before it happened? One, because my bias was what? Bearish, right? Because I knew the bulls were extremely weak. Because I knew that the bulls long term should have, a long time ago, should have made that new structure high and not trying to consider it here. I knew from the order flow, from the momentum, from all of that stuff, that the bears were trying to keep the bulls from climbing up. I knew that if the bears were going to stop the bulls, they needed to, this was the most critical area for them. This is where they were going to show the highest degree of strength in being able to do that if they were going to achieve that. Okay? This was their line in the sand. This is where they needed to turn on the selling. Y'all see that? Yes, no, maybe? Is this helping you guys? Okay, so this is where I would have identified a very high probability setup based on what? Only structure. So as you can see how powerful structure analysis is and how it keeps you with a good expectation as to what should happen. Okay, it's not one swing. It's a context of a lot of swings that tell you, should price be struggling to climb if it was going to climb? No. Should price be struggling to fall if it was going to fall? Well, maybe. Why? Because we were in a very bullish market here. I mean, look at this. We're in a very bullish market. It takes a lot of strength to stop this. Okay? But if the market was strong and serious about climbing, it would have done it here. It wouldn't have just, boom, hit a brick wall and keep hitting your head against that same brick wall. And this is where, I probably have a little better vision than you guys because I've been doing this a lot longer. But this to me was insignificant. Okay? Well, yeah, it produced a weak new structure high. What we do, does that mean I need to change my expectations that price is going to keep going higher? No, not necessarily. Look what's been happening here. Look how many times they were able to stop the bulls from doing that. Okay, so now we're back here. I think we left off somewhere around here. Yeah. Okay, so now what's happening here in the short-term scale? Well, look, we had one swing, right? We had a very weak correction. And then we had major increase in projection and momentum, right? So what does that say for the expectations that I had here? That I have very good possibility that price is going to break these lows and make that new structure low overall, right? I had that expectation here. Have I changed it? No. Did I make little small adjustments as to where price could find resistance? Yes. Okay. I did that. I expected price to hold here, and it came up to the secondary. Then price came lower, and then price was unable to break through, and then eventually break through. Now, when that happened, did I change my expectations? Did I say price needed to make a new structure high here? No. Why? Because this high was not broken. I knew that if the bears are going to hold on to this market and we're going to be able to push price lower, they needed to hold on to this area, right? I knew I had a one-to-one completion. I knew I had exhaustion in this area. I knew the market was already exhausted. Anything beyond a one-to-one is exhaustion. Okay. I saw the overall intent here on the bears from these prior swings. My expectation still remains the same. So that means, yes, a lot. Sure is. So that means the expectation should be valid as long as price doesn't change trend. Yes. Until your expectations have been broken by price closing beyond your level of expectation, okay, your expectations must remain still, okay? That doesn't mean that you can't be concerned, okay? Again, the market is efficient. It should not struggle to break through barriers if it's going to do so, okay? The fact that price has not made a new structure low already or a new structure high already is concerning. Basically, we're in a range bound market, but can we navigate through this range bound market and see what the overall expectation is? Yes, overall expectations for these lows to be broken. I don't expect these highs to be broken. It could still happen, yes. But my expectations are being confirmed further as time progresses. Why? Because now my expectation of new structure low shows more promise. Why? Because now I'm having greater strength in selling, greater momentum, greater projection. So all of these things, okay, confirm my expectations. You can use a short-term order flow to help you confirm your expectations. That is a process I use in my trading all the time. And I've always said that to you guys. The short term confirms the long term. How do you decide when to take a trade in? Well, I told you just basically that I would have been looking for shorts in this area, right? So I would have been looking for, the bar by bar in this area and the highest confluence in this area, in this region here. We would have been looking for the best confluence between ratio extensions to help me make those determinations. We'll talk about trade entry a little later on. I just want you to see the power of just this type of analysis, okay? We'll move price forward. We'll see the bears are still struggling a little bit to make that new structure low. Okay, what's happening here? Right? Overall, very weak pullback, right? We're not making new structure lows, but we're making lower highs, right? So we're still in line with our overall expectation, okay? Now, we want to see a couple of things. We want to see this level hold. We want to see this level hold. Actually, let me do something a little different so you guys can appreciate accuracy here. I want to see this level hold. Okay, I want to see this area hold. Okay, I know that if this area holds, I have a higher degree of possibility of achieving that new structure low below this area right here. Okay. Now we're drifting back up again, right? Not good for the bears. Not good for this area if our expectations are correct. But do I need to change my expectations? No. This high has not been broken. This high right here has not been broken. Neither has this low. I am trapped. Okay? What am I seeing? Overall, what? Very weak correction, right? Do I need to change my expectations? No. Okay? One bar. One show of strength. What does that mean? Nothing. What does that mean in the context? Nothing. Is price respecting this area? Yes. Has my high been taken out? No. My high has not been taken out. Okay? What does that mean? It just means that I need to be concerned here that I'm getting a deeper pullback than expected. Okay? I'm still trying to stay in this range here. My expectation is still a new structure low. I have not changed that. I need at the very least a break above this. Definitely a break above this. Okay? Right now, price is just showing deep corrections. Okay, we should not be seeing this. I agree with you. We should not be seeing this from the bulls in this area. Okay, this could be the last desperate attempt to take price higher. Okay, and now price breaks structure, closes above with a strong candle. Okay, now do my expectations need to be changed? Yes. Okay. But that didn't deter me from the fact that price, we had a good opportunity to go short here that produced about 30 pips of profit, almost. And now price, if you were looking for shorts up here, once price got here, was unable to break the low, made a lower high, was unable to break this low, you were concerned. Did your expectations need to change? No. My expectations changed when my structure has failed. My structure failed here. Second structure failed here. Do I expect a blowout all the way up here? I still do not expect that. Why? Because overall, I'm still making almost 100% pullbacks on every swing. Very helpful, Magician. Thanks. 3 times failed to trade lower shows weakness. Yes, there's weakness on both sides here. Okay, but I still not changing my expectations that price should, head higher here. I mean, the market's showing lots of weakness on both sides, and yes, we're still producing another extremely weak new structure high. The market is speaking to us. It's telling us that it still can push higher. It still intends to. Is that my expectation? My expectation is this move to the upside is very near its end. I do not see price being able to continue being able to produce new structural highs much longer. Okay, in fact, this may be the very last time it does so. Okay, because although there looks like there's a lot of strength here, look at the context. Look at what's happening. Okay, it's just look at the projection between here and here. We barely got past the tails. In fact, we didn't get past the tails of these highs. Okay, what does that tell you? That you're going to get a very deep correction. What does that tell you? That once this happened here, you could have been looking for shorts, right? Is it against order flow? Not really. Right now, you're in the transition between bull and bearish. Neither side is really taking ownership of order flow. Neither side is really taking control. Okay, I still expect price to move lower. Okay, in transition periods, you're going to get stuff like this happening. Okay, it doesn't usually take this long for it to materialize, but sometimes it does, and I'm glad that we're looking at this very complex area and we can still navigate through it with high degree of accuracy. Is price going to extend a little bit past your expectations? Yes, but does that mean you need to change everything? No. Could you trade in range markets then? Yes. What you got to keep your profit targets realistic. If price is trapped in a 10 pip range, I would tell you no. If price is trapped in a 30 pip range, I would say yes, absolutely. What are your profit goals? What are you risking? What's your risk reward? Those are going to answer whether it's worth trading that range or not. Okay, now if you're in the 10 pip range, you can't expect a 20 pip profit target, can you? You have to look at the context of where you're at, the framework. This is your framework. These highs and these lows are your framework. We are in a range bound market. We're trying to decide in what direction price ultimately wants to break in. Okay, we see that right now price is being able to break to the high side, but is not able to hold on to it. So that tells you there's extreme weakness in what used to be a very bullish market. Your overall expectation is what? It has to be that the bears definitely want to change things around. Okay, and they're showing the strength to be able to stop the bulls every time they take price higher. So my expectation, okay, was that price wasn't going to get way up here, and it didn't. Now we're seeing again some of that bearish strength come into the market here. Trading failed, breakout is okay. Trading failed, breakout is okay. Don't really understand that, but I don't break out trade. If I expect price to break out up here, I am not going to get into a trade up here. I'm looking to get into a trade down here. Because what if this is a false breakout? What if I get long here? I see, oh wow, look at that candle. Look at that. That's a huge breakout. Definitely price is going to climb higher. Was that my expectation to begin with? No. Was my expectation that price was going to get way up here? No. Okay, my expectation is that this area would hold. Now the price extend past it a little bit, yes. The market's not perfect. It's not always going to go to that exact line and turn around. Okay, would I be looking for shorts up here? Yes. Does that increase the risk a little bit? Is that a lower probability trade looking for short up here? Yes, it does increase the risk. Why? Because the market was able to break the high. The market did show some strength in doing that. But was my expectation for price to get way up here? No. So did that help my case in building my decision to go shorter? Yes. Did I understand that if I entered a short here, I needed to manage it very aggressively? Yes. So if price would have turned against me and made a new structure high against me, did I need to consider getting out of that trade? Yes. Did any of that situations up here happen? Yes and no. I don't know. I can't tell you. Okay. where I would have entered this trade exactly up here. I know I would have been looking for a short, but in doing that, but it would be me cheating myself to tell you I would have entered here and here. Why? Because the information is already there. Okay, so I'm not going to cheat you and myself to tell you, oh yes, look, I would have entered right here, and look, price never went against me. No, I wouldn't have definitely not been looking for a long here, because my expectation was not for price to get up here, and my expectation was not for price to get way up here. So sure, aggressively, but with small risk. Yes, relatively small risk, because you know if price closes against you, then you were wrong. Makes sense. So expectation is key. Yes, expectation is critical. It keeps you aligned with order flow. It lets you know where price should and shouldn't be. It lets you know that when you enter a trade, you're entering because you expect the market to continue in the direction that you entered. And if it doesn't, then you're wrong. And you need to consider your options at that point. When do I get out of a trade? I get out of a trade when my reasons for getting into that trade are no longer present. Okay? What does that mean? It means that if I enter short here for whatever reason, then I don't expect price to close above my entry. If it does, I need to consider that context. Did it break structure? Structure is here. No. Okay? So until that structure is broken, my reasons for being in this trade are still remain valid. That means price can get up here. I don't like it. I'm not happy about it. But has price closed against me? No. This structure is still intact. Okay? So until that structure is broken, my reasons for getting into that trade still remain valid. I still expect for price to trade downward. Okay? Now here, price broke this structure. Okay? Technically, that's the market giving me a sign that it can move higher. Do I expect it to move higher? Well, from an expectation standpoint, yes, I would have to say that yes, price is going to move higher. Do I expect it to be able to get higher? No, I expect for price to be able to get below this 5,700. Why do I expect that? I expect that because price has had so many opportunities to get higher, and has showed so much inability to do so. Okay, with the exception of this last swing that showed a little bit more promise till the end. Look, it started out very weak, and all of a sudden towards the end it picked up a little bit of strength. Right? Look at the bears. The bears are getting angrier and angrier. Okay, so all of that leads me to my, you got to have realistic expectations. Yes, my expectation, from a broader standpoint would be a new structure high, but is that realistic? Probably not. There we go. See that? Makes sense. So expectancy, yes. It looks like double top. So timing could be now to expect more decisive action. Yes. Okay. So did you see how back here somewhere, don't remember exactly where, we knew that this had a higher possibility of happening versus a new structure high? Did you see how I was able to navigate through a very complex range-bound market? Okay, and although we had little clues that price could still head higher, our expectation, okay, was for price to be able to push lower, for price to be able to break structure to the downside. So do you see how powerful structure analysis is, and how this helps you stay on the right side of the market's intended directional movement? And until your expectations fail, there is absolutely no need to change them. They may be breaking down on you, but until they fail, they remain valid. Okay? So, are there any questions regarding structure analysis before we move on to order flow? No. I don't know of any books. Um, I'm sure there are many books out there on structure analysis, but I don't think um, they'll look at structure how I do. I think books are great because they give you an overall um, sense of broad knowledge. I think that if you really want to learn this, the way to really do it is to do what I just did. I used to do countless exercises of this. You know, what do I expect? And move price forward like this so you can see. And the more you do this, the clearer it will become. I think books to some extent hurt you. Um, because how do you know what you're reading is quality stuff? But you can look at that chart with no indicator or anything and know that once you can process it with accuracy, then you have trained your eyes and your brain to process the information in an efficient and effective manner to help you. I've given you the concept. New structure high. New structure high, I expect a higher low. I got a new structure low. Okay, I need to realign my expectation. What do I expect? Low or high? Did I get that? Yes. What do I expect? New structure high. Boom. New structure low. Boom, I got that. Yes. What do I expect? Low or high? Okay, and I think you realign yourself. And in this short-term order flow, you can see how you have to keep changing your expectations because price keeps making swings higher or lower, but does it get you to the same place? Yes, it will all lead you to the same place. Okay? Now, in the longer term order flow, you say clear high, clear low. 100% agree that that's a high, 100% agree that that's a low, right? 100% agree that that's a high, 100% agree that that's a low, right? That's a high or low. What do you expect? New structure high. Did I get it? No. What do I expect? New structure low. Boom. What do I expect? Low or high? What did I get? Low or high? What do I expect? New structure low. New structure low. Okay? Increased momentum. Increased projection. Okay? What do I expect? I expect a weak pullback. To where? Well, where's the structure in the area? There's structure around here. Okay? Well, sorry. I kind of cheated a little bit there. Sorry. So I'm not going to try to navigate that because we already saw what was in front of us. And the last thing that I want you guys to see or to think is that I'm cheating you guys, because I'm not. I'm doing this without knowing what's in front of me. So the fact that we haven't had a sustained correction, this is the most sustained correction. Here you can see your price already showing weakness where there shouldn't be weakness. So, you know, this market is heading back down. But aside from that, we can get into order flow analysis. We just got through structure. So from my side, not from my side. Oh, so it's not clear from your side? Very good and detailed. So use long-term expectations to determine which direction you're going to place your trade. Short-term expectations to manage your trade. Good. Yes. I mean, no questions from my side. Okay, good. So we feel confident in that. Okay, we'll tie all these things in together a little later on when we start identifying, trade setups. So now we're approaching 8 o'clock in the morning, more or less the time that I want to get on my computer and trade. I take my daughter to school in the morning, so get rid of these lines. So this is about the time that I'm getting into my computer. Okay, so let's find things up a little bit. So I'm here. What do I see? I see bears are in control of the market. I look for my main swing. I see that I have a swing here, a correction. I have a swing here. I have a correction. We're still very bearish. We're not really correcting to the 382 of anything. I see price has just made a new structure low here. Do I have any structure in the immediate future, in the immediate past here? I have some structure here. I'm below it. So I don't have anything that I can hold price to. I don't have a framework. So I have to decide. I know that I'm in a bearish market. If I expect a correction, it would be minimum to some area of structure. This is there's a swing here, and this is the clear high. So far, this may or may not be the clear low. Okay, I'm looking for short. I'm looking for, I would have to say that I would not be looking for anything long here because of one, I'm in a very bearish market. Two, I have structure right against me here. I don't have room to remove risk or to eliminate risk altogether. So I'm not particularly looking for anything on the long. I'm looking for shorts. I see that my depth is weak on the bears. I see that my projection is strong. I see that my momentum, which is the angle in which the swing is happening, it's pretty consistent here. So although this is an invitation from the bulls, from a bar-to-bar perspective, to correct here, I don't expect this correction to get way up this far. It would be not very typical for that. Would be not in line with my expectations. Expectation would be for price to be able to get back somewhere into this area. This is the area that price should be able to get back to. However, structure is here. I know this line's crooked. I don't know why I'm drawing crooked lines today. Normally don't draw crooked lines. Draw a new one. That's what I'm looking for. I draw my ratios. As you can see, I didn't look for ABCDs, I didn't look for Garleys, I didn't look for bats. I'm identifying where price should turn if I am right. My expectations for price to be able to produce a new structural low. So what I'm looking to assess where price can turn back. Okay, so I'm going to look at the momentum by which price gets to my intended area. I'm going to look for how deep, as far as depth from the previous swing. We see that we had very shallow here. See, price should hold here. Okay, so price should definitely stay within the confines of that line and rectangle if I am right. Now, until price does that, I don't do anything. Okay, boom. Price has now interacted with my area of interest. So I need to consider what's happening now. Okay, what's happening? Price came here, very shallow correction, right? Price had a very weak new structural low. Okay, price should be able to correct deeper. Price, this is when it was its strongest point. This is where price should have made that new structural low way down here. Price was unable to do that. Price made a new structure high from here on the short-term order flow, right? What does that tell you? Market wants to head higher. What do I expect? A deep correction, maybe even a higher low. Okay, boom, we got both. We got 100%. Okay, then we have increased momentum. We have increased projection to the upside. So would I look to enter short here? No, everything in the market is telling me that this market intends to push higher and has the capability to do so, right? So I have identified a possible trading opportunity to the downside. However, now that price has gotten there, I have a lot of information that tells me not yet, right? But if I am right about price making that new structure low, what area needs to hold? This one and this one, right? So this line, this price should not get past this area for sure. 100% price should not get past this area. This is a secondary. Okay, price should not get past that. This is where I have identified a possible trading opportunity to the downside. This is where timing your trend, this is where timing your entry becomes important. So momentum is increasing. Projection has made a new structure high against my expectation of a new structure low. Does that mean I need to change my expectation that this market is now heading upwards? No. Okay, because this has not been broken and this has not been broken. Okay, so we're either going to range in this area. Price will tell us what we need to do. Which is more important of the two swing highs? Well, the first one is important. Okay, that's your line in the sand. Okay, because if the bears are going to make a new structure low, they need to do it sooner versus later. So the sooner they're able to do that, the better. The longer it takes them to do that, look what happened up there. You know, they're at their strongest point right here, technically. This is where the bears should be the strongest. Okay, but price did not achieve a 38.2 retracement until it got here. See that? That also showed weakness on the bulls, but it showed major weakness on the bears because they should have been able to make a convincing new structure low here, definitely here. Okay, so things are breaking down for the bears right now. That's not to say that things can't change. We're navigating through the order flow analysis. Okay, we're seeing that we have identified a possible trading opportunity to the downside here, but price is what? Showing too much strength against us here. There's too much strength here. There shouldn't be strength here. Price is going to go down. Okay, so we need more information. So now we're seeing a little less of a determination here. Now we see more weakness here on the bulls. We see the golden zone here, and here. We see that this structure area is holding. Okay, so we see weakness here in the order flow. Okay, now we see a decision to go short. Okay, so what does this tell us? It tells us that if we're short here, this is where I would enter short here. I would enter short right here. Okay, I had the weakness, okay, and the invitation. And then we had a decision to sell here. The bears entered here, were able to not allow price to get past this area. Okay, so where would I put my stop? Well, my stop has to be above this because this is where I know I am wrong. Okay, I do not want to see price get above this area. Okay, what am I risking? Ruler. I entered here. So I do not want to see price get above that area. Okay, which is 11 pips. Sorry guys. Sometimes I cancel. Let me just do it over. So I enter here. I do not want to see price get above that area, which is 8 pips. And I know I need to get out of this trade if price definitely closes above this area. So I'm risking about 14. Okay. And my expectation is a new structure low. How far should that new structure low be? Well, my expectation is at the very least a 1-to-1. Is that always going to happen? No, but that is my expectation. So I expect price to be able to get into this area. Oh crap. Sorry, I got to do it this way because it interferes with my recording. Fibonacci extension. Oops. Fibonacci extension. Okay. I have an expectation of the very least a 127 extension to be hit. I see that a 1-to-1 finishes here. So somewhere in this area, I expect for my target to be hit. Okay. So I am risking 11 for a possible 27. Okay, so now we follow price. We see price struggled a little bit, then produce. We see here. Now this is where we don't want to see. We do not want to see price struggling to drop in a very bearish environment. But right now, price has made a low and an attempt to correct, did not make a new structure high against itself, made a new structure low. So far, the short-term order flow is confirming our overall expectation, and price is expected to continue moving lower, retest these lows, and get through them. That's my expectations. Are you all following me so far? Yes. Question is asked, isn't it better to short in the golden zone because better risk reward? Yes, but did price give us, okay, the information that we needed to get into the trade in the golden zone? This is the golden zone. How did price approach that? Look at the strength. Look at the projection. Made a new structure high against the short-term order flow. There was a lot of strength here in price getting higher. I did not have the proper information to get into the trade. Ideally, yes, that would have been very aggressive, but they did not have. I would have entered the trade without having a clear signal from the bears that they were going to be able to stop and intend to enter the market at that level. I saw weakness, but that's all I had. Okay, so yes, ideally you want to enter there. That would have been entering with blindfold on. You know, there was too much information there telling me that there was still the possibility for price to continue going higher. The bearish candle in essence was the confirmation, not because it was an engulfing, not because it was a powerful one, not because it closed at its low, but because price, the bears were able to keep price from getting past the barrier that I expected price to hold on to. Okay, remember we drew this line before price even got there. That was a primary, that was a secondary. This was where I expected price to turn. However, look at what the strength that price got there. Okay, you know, taking a trade there would have been extremely aggressive. Okay, and without the proper information to confirm me that I had a high probability setup. Right there, it says I have a setup, but it's not high probability because the increased strength. Okay, y'all follow the difference? You see the difference? And why sometimes it pays to have information, even if you're getting into the trade just a little bit later, but you do have better information. You do have a better sense of, you know, of your expectations are correct, and that although price is breaking down here and price is showing the ability to climb higher, you should still remain true to your overall expectation of that new structure low. It's extremely important. Okay, I'm all for entering early and getting smaller risk reward, but if I have information that's telling me that my trading setup is not as good as I think it is, I'm going to wait until I do have the proper confirmation, because there's no sense in getting into a trade that's just going to fail. Yes, in this case it is better to wait. So now we're seeing that the short-term expectation is keeping us in line with our longer-term expectations. Our longer-term expectations are new structure low, so we should be seeing the short-term overflow do the same thing, lower highs and new structure lows. Price doesn't move in a straight line. There's always small corrections, but we use those small corrections to help us, okay, reach our expectations. Now we know that there's an invitation to correct here. Okay, so now we definitely want to see this area hold, right? We want to see this area hold, so we're going to extend this line across. Okay. We want to see, you know, price interacted with this, with these lows here. Okay, so now we're going to make sure that we remove risk from our trade. And if we're right, that area should hold. Now price held. Price made a new structure low. Okay, we should be able to get past this. Price is going to slow down here. Why? Because it's structure. Price is always going to slow down as structure. Sometimes it just blows right through it, but you should always expect some sort of interaction with structure. Okay, boom, we got a way stronger than expected reaction to structure. This is very concerning. Okay, do I need to change my expectations? No. Do I need to say that the market found support here and is going to blow back up into this area right here? No. Just means that I am finding more strength than I should find here. I need to make sure that my risk is eliminated from my trade, so that at the very least I don't lose anything. I need to protect my trade. Protect it always. Yes, I will be at break even now. There it is. Profit target achieved. Does that mean I am going to get out there? No. Why? Look at the amount of strength the price got there with. Okay. Do I expect the bears to be able to continue to take price lower? Okay. No, I am not going to take target there. I manage my trades live, so I close my trade when I get ready to close my trade. I do not have a predetermined take profit point there unless I'm going to be away from my computer. Okay. And this is an area where I would now consider a making sure that I am either out of this trade altogether, or I trail very aggressively my stop. Why? Because I am in an extreme exhaustion area. Look at these ratios. This is the 127, this is the 138, this is the 161, and this is the 200. Okay? So this is an area where definitely you want to be either out of this trade or trail very aggressively. We should get a good correction here, a deeper correction. So whether you choose to, this was my entry, let's just say for the sake of argument that we took profit there, 42 pips. Okay, so we're risking somewhere between 8, definitely 14 pips to make 42 pips. That's the kind of risk reward that you want to work with. We know that our risk reward initially was into this area, but when price got there, it had a lot of strength. There was no reason to get out of that trade. We started seeing some more weakness in these deeper exhaustion areas, and now we see a clear invitation to correct here. Why not take your 42 and be done with it? I'm sorry, I see that you guys didn't. Okay, there. So now you have a clear indication there that there is going to be a correction. You are severely overbought. I'm sorry, oversold. You're still in no man's land from as far as structure standpoint. So there is nothing to really hold on to price. I don't see a good reason to get into a counter trend situation here, so that I didn't have structure to support my position. I only have invitation, and I do have rotation for a correction. That's all I have. There is no structure. I am well beyond a one-to-one that I was trading. I do have good projection. I expect a weak pullback. I have greater momentum on the bears here than I did on the previous all of these swings. So a correction here will be high risk. I do nonetheless expect at the very least a 38% correction. I told you I expect every correction that's going to be a real correction to hit the 138. You know, do I have a good risk reward profile there? No, it's barely a 1-to-1. So why risk that? Can it get deeper? Sure. But what am I looking for? I'm not looking for a long. I'm looking for an opportunity to get short. Why? Because this market is increasing to the downside. Because this market is telling us and showing us that it can and will move lower. So now, what do we see? Weakness. Okay. What do we see? Should we be seeing weakness? Yes, it's not great if you miss those setups. Okay, so here we have an opportunity to say that this market is showing that we are in line with our expectations of a deep correction. It's not. What happened? Oh, guys, I'm very sorry. Hang on a second here. I don't know what day I was on. I messed up completely. I'm so sorry. I pressed the wrong button on my computer. Forgive me. Okay, here. So, here. So we see here that our expectation here for price to get back here. I'm sorry, we were here. Okay, so we see the weakness here. We see where the bears are intending to get back into this market. We're seeing that we need to even get back here. So we are seeing where price can. Time for a 5-minute break. Hang on a second. Let me catch up with you guys. So you would exit at the sign of strength at exhaustion. Would you ever re-enter in the same setup on the pullback? No, like I said here, my expectation here is for a weak pullback. My expectation here is not for a deep correction, and therefore I would not look to enter long in this area at all. And I will be looking to short if price ever makes it back into these areas right here. That would be my expectation. but we have to wait for price to get there, if it can get there, and make that determination then. Okay, so you guys want to take a break? Okay, we've been going for about an hour and a half, so let's take a 10-minute break. We can come back at 10:45. Okay. What time is it now? 10:35. So 10:45. 10:45. Okay, guys. I'll mute my mic so you don't hear any noise. Let me just recap that for the recording. We saw a huge projection here. We saw increased momentum. We would expect a shallow correction here. My expectation on a correction should always get to the 38. However, we are already seeing some weakness here in the bulls that would have us not likely to expect that 38% correction, which makes me feel good about not looking for longs here. Okay, and that's one of the reasons why I would not look for a long in this situation. I had an absence of structure to help me confine price to. I was in a very severely oversold market, which means there's a lot of strength there. My expectation is a shallow pullback overall because of the huge projection. For all those reasons, I would not even consider looking for any longs here. I already see weakness in the bulls, and I see the bears being able to hold on to their first candle here, which tells me that we're not going to get a very deep correction here. So moving forward, we see that now they held on to their second candle, and now we have an expectation of a new structure low. Okay, and we should get some good projection out of this. Let's see what ends up happening. So now we're doing our bar by bar, and we're starting to see a little more volume in this candle than in the previous candles, and now we're starting to see some of that underlying strength here starting to, take hold of the swing, and now we can see that this is what should be the next impulse swing. And what's happening here? We're starting to see some weakness. Look at the 1, 2, 3, 4 candles taking price to this level. 1, 2, 3, 4, 5, 6, 7, 8 candles getting priced to near these lows. Okay, we should not be seeing this much weakness with this underlying strength that we saw here. So this is concerning to me. This tells me that, well, one, I wouldn't have considered a short in this area. Why? Because price is not at the very least achieved here. 38% extension. So I would not have been looking for a short here. And the amount of strength that I see taking price lower deeply concerns me in price being able to achieve a good projection as of right now. Now we see bulls come back into this market. They should not be doing this. They should not be able to do this. This is something that is out of the normal expectations. We're seeing price try to hold here at a retest of this low. That should not be happening. Okay, so my expectation is still that we have a new structure low, and until this high is broken, or this low, or we do get that new structure low, that is the expectation. Expectation is a new structure low. We get a very weak new structure low. We get another show of strength by the bulls to correct here. We see even greater weakness here from the bears. We see much more volume enter the market from a buying standpoint than a selling standpoint. We see the bears not being able to push this back. We're in for a deeper correction here. We're in for a very weak new structure low. I'd be surprised. This is the invitation to correct again off of this new structure low. So we don't expect price to get very much deeper now. I see that we have a round number here. We may trickle into it, but right now I would expect a correction somewhere around this area right here. I don't have any structure to guide me, but I am using the momentum. I am using the order flow here to help me decide that. Look at the projection and the momentum here. Look at the momentum here. A lot different. Look at the volume in these candles. Okay, they're being consumed by buying. So I would expect, sorry, hang on, let me read this. The importance of volume smaller and higher. The importance of volume is important because if you see this, there's very small volume candles here to the bears. Should there be selling with greater strength here? Yes. Than they are here? Yes. Now, yes, there is a little bit of price acceleration from a volume standpoint. The candles are getting bigger. But what's happening to that volume? It's turning bullish, is it not? Can you all see that the volume is turning bullish? Yes? Okay. Would you agree that we should not be seeing bullish volume increasing in this area? Would you agree with that? Okay. So because of that, we would have to say that, we are in for a deeper correction and we may be able to achieve that now. Now that means in the short-term order flow, we would see a new structure high. That means on the order flow, we failed to see the kind of new structure low that we expected to see way down here somewhere, right? So that tells you that continued movement to the downside definitely has its challenges ahead of it. We're not changing our expectations yet, but we are seeing what's happening. We're taking that into consideration to help us say that the bears are not as strong as we think they should be. The bears are showing a lot more weakness than they should be showing, and because of that, we could be seeing some deeper price correction. Okay? Now price did achieve that. Price did get down here. Okay? But I can't help but remember about all of the strength that the bulls are trying to show here. Okay? And now we have a good less projection from here to here. Okay? We have a second invitation to correct here. We have rejection and we have buying commitment here. Okay? Now, in considering this candle to this candle, it's not a whole lot stronger, but that's definitely an invitation to correct here. And an invitation to correct here would have us correcting deep, somewhere near this area right here. Okay? That would be a normal correction, would be for price to get into this area. So if I am looking to short this market, I will be very interested to see how price hits this area. Okay? Because that would give me a deeper correction. I see I have the golden zone here. So this is a great area if I would be considering a possible shorting opportunity. Okay? Why? Because the market is bearish. And we see that the market was showing a little bit of bullish strength where there shouldn't be. So now I know that I'm going to get a deeper correction. I had a smaller projection, had less momentum. I know that I'm going to get a better correction here. Okay, now I see volume increase, volume decrease in my expected area. Okay, I expect price to have a reaction to this area. Okay, I saw weakness, and then what did I see? Did I see any decisions to sell? No. What happened? I got increase. Okay, I got an increase in volume and more decision to buy, right? This is how I filter my trades out. Although I was looking for a short here, although I had weakness, I did not get any commitment from the bears to follow through. So that's why we process that information here. Okay, yeah, round number, I don't hold price to a whole lot of round numbers. I let the order flow and the candles. I know that their psychological levels. I know that price wants to test them, and the price usually reacts to them one way or another. But I already saw all that, with the candles. And like here, where I had weakness in that trading decision earlier, I had the same degree of weakness here. However, see where getting into a short here just because price got to the golden zone would potentially put me in trouble. Okay, now where do we go from here? We identified this as a possible trading opportunity to the short side. Right now I have passed on this opportunity here because I didn't see the decision or commitment that I needed to see from the bears. Okay, my expectation is still a new structure low. Why? Because this area still remains intact. And that area is expected to hold if we are right about this. Okay? So moving forward, look what happens. Okay? Clear, decisive action on the bulls. Okay? Our market is changing directions possibly. We are looking for deeper correction. We cannot expect price to turn here or here. We are not looking for any shorts. We are not looking for possible opportunities to head long into this market. Okay? Overall, from a longer term expectation, this market is still looking to be bearish. We might be looking to test these highs here for the market to continue, but why can't we not take an opportunity from here to here if that's where the market is intended to go? Okay? So now we have to not change gears, not change our expectations, but we have to understand that this market intends to correct deeper, and we are looking for opportunities to still be short long term, short long term, long short term. So short term, we're looking for maybe longs into this area, into this structure area right here. Let me erase some of these lines so we don't keep our charts clean. I like to keep clean charts. Once something is not in use anymore or we don't need it, there's no sense in having it on your chart. We'll leave that there. That was our first our first trade. We already filtered this trade, and now we don't need this fib anymore. Holy crap, I did it again. What an idiot. Sorry, guys. Okay, unfortunately, we kind of cheated there, but we'll catch up. Don't worry. Okay, so we see that we saw that price is expected to we draw a rectangle here. So now we expect price to react to this area right here. We can make sure I press the right button. Draw here. Now we know we're due for a deeper correction. This is the clear high, clear low. We see that price is correcting. We were looking to identify a trading opportunity here. We did not get what we needed to see from price, so therefore we dismissed that opportunity. We filtered it out. We didn't need any indicators or anything for that. We just used our skill set. Price has made a new structure high with strength and commitment and decision, so therefore we expect price to continue higher. Next level of structure is there. The ratio confluence is there. For you round number folks, there's a little round number here, 650. Okay, we'll draw a little line there for you guys. Okay, and now we're looking to see how price behaves. Okay, well, nice reaction there. Good decision making here. This is a pretty good opportunity to go short. This is an area that is challenging. We're trading right into structure right here. Our risk reward is not great. It's barely a 1-to-1. Okay, we have increased momentum. We have huge strong projection up. So I would expect although we're expecting a new structure low overall, I would tend to trade not to trade against that because of the obvious. There's a huge momentum increase. We got huge volume increase on the bulls. Although we have a nice candle here that tells us that sellers are committed and eager to enter the market. I'm trading right into some weak structure here. Nonetheless, it is structure, and with this much strength up, I would not consider that as a great trading opportunity, but it is a trading opportunity. What are you risking? You're risking 36 to 46 or 48, so about 12 pips for a possible 36 to, for a possible 9 pips. Not worth the risk reward. It's barely a 1-to-1 if price is to find support here. So therefore, it's an opportunity that I would not take on. I would like to see how price conducts itself on the move back down and look for possible signs of weakness. Because if we do see weakness, then our expectation of that new structure low is unrealistic and something that we don't need to look for. Are you with me? Okay, this is important. I just want to make sure you guys are with me and that you're understanding everything clearly, because we are navigating through this chart. Yes, can we look for 2 times to test the area? Too short. Yeah, you don't always get a double hit. I think a double hit is your signal is a lot stronger on the first one than on the second one. Because if price is serious about continuing on, it shouldn't have to go back to test it again, you know? I think retests are lower probability setups. I always like to take the first one, and will be weary to take the second one. I would manage the second one a lot more aggressively, even though it's somewhat of a confirmation. But if price was strong enough to correct there, should it be getting back to test those highs or lows? Not really, you know? I think that's more important when you expect a new structure low to fail. Like here, if price was to get all the way back down here with weakness, then that would be an opportunity to go long that I would consider. I'm actually not expecting this market to get this deep again. I see the increase in momentum. I see the increase in projection. I see a strong candle here. But right now I don't have enough information. The risk reward is not great. I don't expect, just with this little information we have, this much strength and momentum should not be happening. We should not be getting a 61% correction with this much projection that we had previously. The bears are breaking down here really fast. So my expectation of a new structure low, even though that's what we should be expecting, it's kind of unreasonable to expect. Do y'all see that? Yeah, so avoid the trade because of momentum and bad risk reward. Yes, absolutely. I saw one trade on the pound USD video that you made. You trade aggressive C on the second time weakness to go higher. Yeah, every situation is going to be a little different. In this scenario here, we're talking about this scenario. If price was to come down, let's say to here, and come up again to retest these highs, what is the underlying strength? Bulls, right? So if price only got to here and is pushing up to test these highs, wouldn't you say that it would be a lower probability that the second time that high would hold? You know, therefore, that's why I would not consider, you know, taking a retest for a move back down. I think that to me would be a lower probability trade than if I was just to take it here and manage my trades. Because if I was to take a short here, manage my trade aggressively, I know that if I'm right, price should not close above this and definitely should not get above this. So that's my risk. However, is that a high risk trade if I take this short here now? You know, I believe so. Even though it is in line with expectation, even though it is in line with longer term order flow, what is the short term order flow telling me? I've made a new structure high with a lot of projection, with a lot of strength, with a lot of momentum. I'm way deeper than I should be on this much projection. I have all of these things that are telling me that the market's not ready to go down, and the market is telling me, you know, with an overwhelming degree of information that it wants to head higher. So that's why I'm not considering a short here, even though that's what, you know, overall that's what we would expect. Now, if price got here, you know, it took 80 candles to get up there, or, you know, I saw a major weakness in getting up here, I will feel better about taking that short. There would be better information for me to act on a short. Okay? So right now we have identified this as a low probability setup and a low probability attempt to correct into that new structure low that we were expecting. Okay? All being what? Low probability. So therefore they probably will not happen. Okay, so now we look to see and we got no commitment, no decision to keep selling. The next candle was bullish. Okay, so now I feel good that I didn't look for a trading opportunity here to the downside. I see there's still a lot of buyers present here. I see that there are no sellers with any strength to be able to keep price from climbing, as this candle closed near its high, and now I see that, you know, we're probably not going to get a very deep correction here at all. We would have to see. And for those of you that like the patterns, this is where you start thinking about this. Okay, well, I got a qualification for a potential ABC to the downside or Gartley. Because of this much momentum here, I do not expect a new structure low. I would expect, if anything, a correction. We'll see how far that gets. We'll draw another fib here. So I know if I'm going to get into a potential Gartley situation, I know price needs to come back to this area. Okay, price is closed exactly where I told you it shouldn't close, if we were right about this. So our expectation of price moving down here is unlikely. However, this area still has to hold. You know, if we're going to see a potential Gartley, price cannot close above the 53. Okay, price closed at 54, closed above the 786. Gartley is eliminated, so is an ABC to the downside. This market is intending to change directions and is intending to go higher. Okay, we still have not closed above this structure area here, but now all the more reason why we should agree that a new structure low here overall is very unlikely, and we should not expect it. So is there a trading opportunity now? No, there is not a trading opportunity. I will look to see if there's how price handles this area up here. There is no trading opportunity at all from my perspective anywhere in here right now, and it's just a waiting game to see. Right now the markets overwhelmingly tell us its intent to go higher, to correct higher, and try to test these highs. Okay, so now because of that, we should be looking for what? Longs or short? Anybody want to guess? I hope you're not guessing. I hope you know. Good. We're looking for longs now. Okay. Where would we be looking for longs? Would I be looking for longs at the 382, at the 50, the 618? I'm probably going to be looking for longs somewhere near this. I'll draw a rectangle for you, and I'll tell you why now. I will be looking for longs in this area right here. Okay. I also have to understand that price may not get this far. Why? Because it's huge momentum, huge projection. Okay, from here. Okay, so I would expect price probably to hit the upper square here, if at all. But I would like to correct the deeper. Why? Because that's where my structure is. So I would assess here, and I see a candle here that may or may not mean nothing. There's definitely an invitation to keep buying here. Definitely an invitation to keep going higher. It could have just been the breakout pullback test of that round number in this minor structure area. We need more information. Nonetheless, price did not get here or here, so we're not looking for any trading opportunity at the moment. Okay, price did correct there. Price did form a weak new structure high if this is where it ends up correcting. So if that's the case, then we would expect a deeper correction overall, maybe past these lows. We'll see what price ends up doing though. Okay, price is trying to stay above that round number. Price is in fact trying to stay bullish overall. Okay, now we could expect these highs to be tested and broken. We haven't had a meaningful correction. I'm still not looking for any type of trading opportunity to either side right now. I am on the sidelines because I am unsure exactly where price intends to go longer term other than up. So I'm looking for a deeper correction. This is our first correction off of this little minor correction It was a weak new structure high followed by a relatively mid-range pullback. I would like to see another one before I make a decision to go long or short. Let's see. Initial. Hang on a second. Good. Shallow retracement. Good. Between the 50 and the 61.8. Yes, we had that identified. Previous structure. Yes. Since there's strong momentum, so we could expect shallow correction. So the 3. Good. Yes, all of you guys are correct. Okay, none of which we got. Price is still trying to climb higher. Okay, great. So now that we have identified that, we have confirmed that the market does indeed want to go higher. We should be looking for long opportunities, but where? Okay, do we want to trade the short-term order flow? You know, risk-reward wise, it doesn't make sense for me to do that. So we'll see how price materializes. We have an even bigger impulsive move to the upside. And now we see that we have a candle here that fails to go higher. Excuse me, guys. My daughter's knocking at the door. Ariana, please stop. Okay, so now we're caught in a situation where price has stalled here for a moment. There is some structure here. Let's see how strong the structure is. Not very strong at all. I got. Hold on a second. Let me get my daughter under control. 1 second. I'm sorry. I'm gonna mute the mic. Pause the recording. 1 second. I'm sorry. Sorry, guys. So we're in a situation here where we're a little unclear whether this market wants to keep heading up there. It's just retesting these highs. Right now, the market's speaking to us and tells us it wants to head higher. So what we're looking for is we're looking for opportunities to get long and not short. Okay, so the strongest structure in this area will be somewhere around here, somewhere around this level here. So we're moving price forward and we're looking for opportunities to get long. Okay, and this is our invitation here for price to get longer. Now, risk reward wise is not great, but does it pose an opportunity to get long here? That's relatively small risk. The answer is not really. But we can't keep missing swings and not looking for opportunities. 1-to-1 is somewhere into this neighborhood. Could I get into a long opportunity here and keep it very tight? Yes, the answer is yes. So I would look for a very aggressive long entry here. From a trading standpoint, expecting these highs to be broken and for price to continue pressing higher. If I'm wrong, I know that price should not close against me, should definitely not close below the 786. That risk reward is too great for me, so I would keep this one very tight. I would definitely not accept a closure below the 618. So this is where I would have identified a long opportunity here. It is high risk. It is in line with an AB equals CD with an expectation of a 1-to-1. So if I'm right about this, price should not close below the 50, especially if I'm right about the order flow, because the order flow is increasing momentum, is increasing projection. So the 50% Fibonacci ratio should hold, right? Yes, no? Okay, so looking at that, now we already see trouble in paradise, right? We see that price is not being able to follow through. Let me move this line over so you guys can see it. We see that price is not, we're long here, so now we're in a little bit of drawdown. Price should not close below this. Okay, price is just closed against us. The 50% is holding. Okay, and there we are. We're wrong. This is an area where you need to get out of this trade. Okay, as price should not have had difficulty here in climbing higher. Okay, so this is a high risk trade that we knew, that we identified, and we would have taken a loss on. So on that trade, we would have lost 12. We'll put that one in red. Okay. So now, what's happening here? We have to consider the context. Price has failed once and twice to make a new structure high, okay, on the short-term order flow. Price has not made a new structure high from here, has made a weak new structure high from here, so maybe we could expect here, what we should expect here is for price to try to get lower here. We see some increase in momentum, so now we could expect that deeper, longer-term correction from an order flow perspective, and for price to, try to correct into these deeper levels for then another attempt to take price higher. That's how we look at this. Okay, so we took a chance here on an aggressive entry for price to continue going higher off of the short-term order flow. It was unable to do that. It produced a new structure low, so we took the loss. No sense of staying in this trade, even though it could turn around, head back higher. This should not have happened. Momentum should not increase. We're now expecting some deeper price action in the short-term order flow, and price to get, somewhere deeper into this area. Okay, and now we start to see here price increase momentum. Our expectations were correct. We are seeing some of that deeper price action. We are seeing here what appears to be an invitation to buy. Okay, there's not enough information from here to justify taking a long position, even though my expectation of this market wants to reverse back to the upside. So I will not be looking for a long just yet. I need to see a little more information here. Okay, now I have more information for a long. Okay, and but what am I trading into? I'm trading into structure here. I'm trading into, well, that provides a decent opportunity, but I am trading into some structure here. Again, this would have to be another trade that I manage very aggressively to the upside. I would like to see price get back into this area here for me to decide to look for a long. This is a little premature. If I take the long here, I have two choices that I can make. I can either wait for price to continue going further, or if it drifts against me, understand that price could test these areas, and I would need to hold on to that trade and give that trade a little more room. Am I prepared to do that? Well, with a one-to-one to the upside, yes. Can I expect a one-to-one to the upside? Not necessarily. I still have some pretty decent momentum here in the bears, and I'm trading right into the structure here, so I'm not comfortable with that risk reward profile of this particular trade, so I will wait for price to get deeper before I consider a long. And I can see some of that weakness here. There shouldn't be weakness here. Bears should not be able to hold on to any candle in this area. Therefore, I would have to conclude that price is going to continue moving lower if the bulls don't take hold of the next couple of candles. Okay, now we see the price made a new structure low in the very short term. There was greater weakness here coming back. I'm still not convinced that the bulls are strong enough to hold on to this market, and I would need to wait and get more information. Okay, now the information is changing. As you can see, I have even less momentum, even less strength before, and I do have the bears are in essence being stopped here. So I am a little deeper, not exactly where I want to be, but now I have more information that tells me that the bears are or should be weaker than they were, and that taking a long here is not totally unreasonable. And as my expectations of price trying to move back higher becoming stronger, because why? Because we're having more deeper corrections, new structure high, even though there's a new structure high and new structure low all in the same swing here, and that may open ourselves up to some range bound market. I also have to understand that well, considering also it's 1:30 in the afternoon already, I would be done trading already. I would have ended my day 42 minus 12, so about 30 pips. And anyway, aside from that, for the sake of education, we're going to keep pressing on here and we're going to end up in some pretty tight markets because of the time of day. Nonetheless, we would consider the information we have, and we are looking for price to not be able to push very much deeper, and to look for price to try to head back higher in line with the longer term expectation here. So this is an area where if you do decide to take a trade here, your risk reward profile is not horrible if you are expecting a 1-to-1 to the upside. So my expectation is for these highs to be tested, if not broken. What did price do? Price got there, it got tested, it was not able to break it. Huge show of strength to the downside, huge amount of momentum. That's the market speaking to us at its earliest stage, and say that that's not going to be a possibility of achieving that new structure high, and that we could expect markets to continue to push lower, possibly into the area that we had pre-identified as a a good turning point for this. Okay, and now price hit that area that we had identified here. Okay, and now we get that invitation. Now this is a much better, much stronger signal, gives us a better risk reward profile, and it did hit it with the weakness. We are seeing some strength entering, some volume entering the market. We did not have that until this candle, so this is the area where I would consider a long. Okay, what's my risk? If I am right about this, I should not get it closed below this. My risk definitely at a minimum has to be below the 786, as that is the golden zone. So I am risking. I would not take a trade during these hours because it's outside of my trading hours. I want y'all to understand that first, but being that this is what we have, and this is the information that we're looking at, we are identifying entry here. 17 pips, and our looking for these highs to be tested, but definitely we're looking for a new structure high at this point above this area. We have to see how price approaches that. Okay, now we're starting to see some breakdown here. We entered here. Notice we never went into any drawdown. Market came into this round number, broke up, came back down, showing a little bit of breakdown here. Notice in this short-term order flow, we have not seen a deep correction here. So at this point, we will protect our trade and making sure we're at a break even. We have stayed, we went above the 50%. We stayed below it of this swing. That tells us we are kind of bearish in tendency here. If we can't stay or trade above the 50% of this swing, that will tell us that we are in bearish territory. We are protected our trade. We have a risk-free trade at this point. Our stop was initially below the 786. Now it's at a break even. We're sitting possibly in 15 pips of profit right now. So 14 pips of profit, 15, somewhere around there from our entry. So we are at a risk-free trade, and now we are following price. We see that price was unable to make a new structure high. Price has failed on the short-term order flow with our expectation. That is concerning to our progression of trade. And at this point, if you want to be extremely aggressive and exit with some profit, this is exactly where you want to do it. And exit with 11 pips of profit. Price has made a new structure low against the order flow that you're trading. You're trading price to make a new structure high or retest these highs. Price has showed breakdown here and an inability to make a new structure high and a new structure low. Do you all see how you can make a determination? It's not breaking any rules. Should this be happening if you're correct? No. Yeah, you can say, well, I didn't give my trade enough room. And you're absolutely right. But at this point in time, okay, what do you want to do? You can, at the very least, you're not going to lose anything. So let's just say that we are at a break-free trade, but this is an area, I'm showing you different styles of trade management. This is an area where you can decide to walk away with 11 pips and not feel bad about it. Okay? An expectation has failed. Your expectations are that if you are correct, price should be making new structure highs in the short-term order flow consistently, not a new structure low against you, not increased momentum against you. Okay? But if you're at a break even, and definitely at this stage, you definitely want to be at a break even. Okay? And that is why. See? Break even. Okay, you would have been taken out of break even, you know, but you didn't lose anything. Okay? But this is how you protect your trade, this is how you manage your trade. Does that make sense to you guys? Is this information valuable? Does it help you make better decisions? Does it empower you, okay, to trade at a very high level in a simple way? In your analysis, do you ever consider or think in terms of where liquidity may be building up? That is, stop orders when looking at reactions at certain levels. No, I don't care about any of that stuff because, I mean, I don't know where big players are looking to enter the market. It doesn't matter to me. Price will tell me. Price will show me. All I need to do is to follow the order flow and listen to price. And price will tell me exactly what should and should not happen. I knew right here, okay, that should not happen. I knew at this point that if I was to stay in this trade and not protect my trade, I would either walk out with a break-even trade, and if I did not protect my trade, I would probably end up with a losing trade. Why? Because if I am right about this, these lows should not be getting tested already. Okay? So that is the point where I knew, okay, that I needed to protect my trade. I had the suspicion there, the confirmation was there, that's why I told you guys, this is the area right here, exactly. You know, price should not have done that. And because of that, now you have two decisions. Protect your trade, get to a break even, or take profit. Those are the only two choices. Okay? Not look for shorts, not get out and look for shorts, nothing. Why? Because your expectations haven't failed yet. Short term they have, so your trade management's in trouble, your trade's in trouble. You know, this is the point where price told you your trade was in trouble. Okay? Because that should not have happened. So we still enter longs on weak bars. You can, but you know, when is price strongest? Here, right? Price, if your expectation is a new structure high from here and you see this garbage, okay, and then you see momentum increase to the downside, should you be considering any longs at the moment? Okay, that is how you keep yourself from falling prey, okay, to the inexperience, falling prey to order flow. That is how order flow tells you what to expect and what you should be looking for. Okay, now I'm not saying I'm going to be looking for shorts, okay, because my expectation long term is a new structure high. However, what is the order flow telling me? That new structure high has a lot of troubles ahead of it, doesn't it? That maybe that new structure high is probably not going to happen, doesn't it? So am I looking for short yet? No, I'm not looking for any short yet. I am definitely protecting my trade. I definitely, you know, let's say we stayed in this, we got out for a break even, we didn't lose any money. But we are definitely looking for, we see that we have a possible correction here back to the upside. I would expect that the new structure high, that price, if it does not make a new structure high above this, then price is in some really serious trouble. And that our new structure low has a higher probability. So I will be looking to look for shorts somewhere in this area if price shows me the weakness that I want to see. Why? Because the market is showing me intent, will to trade lower. Okay, so I'm looking to see how the bulls progress back up into this area, and if they don't even make it up there, I'm not even looking for a trading opportunity. Why? Because I'm trading too close into structure. Okay. Wow, what does that tell you? No side strong, right? Then again, we're in the middle of the afternoon, so there's very little participants here. So that's why I don't get caught into this mess here, because there's nothing to do. The market picks up a little bit. This is 5 o'clock my time, so the market's showing a little more volume entering the market here. We see a lot of weakness on the climb. I don't care about anything until price reaches this area. If I had to trade this market 24 hours, this is what I'm looking for. I'm waiting for price to get there. Until price gets there, I don't care what happens. So, in looking at this and seeing that the market is very weak, you know, do you think the price is going to get up here? Do you think it has a high probability of getting here, or a low probability? I would say low. I say the market has a higher chance of achieving some downward price action than upwards. Why? Because price has made a lower high and has made a new structure lower. So I expect a deep pullback to about here, and then for price to try to make that break lower. Does that mean I'm looking for any shorts here? No. I'm looking for shorts up here, because overall, in the long term, you know, price has made a higher low, respected that higher low, okay, and I'm in an area where the market has made a higher low, so I am expecting a new structure high. Will that happen? I don't know, okay, but I'm not looking to consider for any shorts on here. At the moment, I'm not looking to look for any longs down here. Why? Because the short-term order flow is telling me that the market wants to push lower. Yeah, it's not Happy New Year. I mean, this was you know, a few days back. I don't know what day it was. I didn't trade this day. This was actually, I don't know. I don't see any arrows, so I didn't trade that day, because my trades get marked on the chart. So I didn't trade this day, whatever day that was. Let me see. Okay, well, we'll know in a little bit what day it is. Okay, boom. Chart, the price has hit this area here. We see it did so at around, you know, 21:58 my time. Now we see that we have a decision to sell in this area. We did approach it with some weakness. That may or may not mean anything. I can take a very low risk trade here to the downside. Go short here. My risk is any close above this, definitely above the 618, is any close above this. I know I'm wrong. My expectations for price to try to produce that new structure low overall, since we have been able to make a new structure high, we should be able to break these lows here. So from a profit perspective, that's my bare minimum. So I'm actually risking this to make this. We'll see what happens. I'm not happy about that. Price should not be farting around like that. Okay, price is making new structure highs against me. Has it closed above that? Just now it did. I'll wait to see what one more candle does. Okay, this is probably going to end up being a losing trade for me. The longer price stays in this area, the less and less reason I have to stay in this trade. I see that price is having major difficulty in closing above here, here, and here. However, this is very bad for my trade if I am short here. This trade did close against me here. Did close against my structure area here. At this point, I no longer had any reasons for staying in this trade. However, I do see all of these weaknesses here. My line in the sand was this. I should not close above this area, which is the 618. So therefore, you know, I am holding to this, but I know that my reasons for being in this trade are, as time progresses, less and less. I'm risking 8 pips. So I don't, doesn't bother me all too much here. I see the price is turning in my favor a little bit. Why the 6? Wait. Do you manage expectation and focus through the day? Do you write them down or highlight certain parts on the chart? No, I do not do that. That's my expectation. My last expectation was a new structure high, so that's in my brain. That's it. You know, until I get a new structure low below this or a new structure high against that, nothing needs to be changed. Okay, so now price has pretty much closed right at my line. I mean, that's basically right on the line, you know. So I'll wait to see what the next candle does. Yeah, at that point, I probably would be out of this trade. Yeah, I would be out of this trade here. So I would have taken that 8, we'll call it 10 pip loss, you know, but I had a decent opportunity with great risk reward that would have turned into a loser. Now, as you can see here, price immediately failed to go in my favor. There was no follow through. Price closed against me, new structure high. Did I rush to get out of this trade? Did I rush? No, because price had not made a new structure high against me. This would have been a new structure high against me. Okay, it did so there with a lot of weakness. Look at all the bulls here. No bulls. Should bulls been able to take price higher there? Did price make a new structure low against this short-term order flow? Yes. So did I need to give this trade a little bit of room? I mean, what am I risking? 10 pips. That's great risk reward, you know. So that's an opportunity that failed. Like I said, this is not a trade I would have taken because it's outside of my trading hours. But for the sake of this, you know, well, let's move to the next trading day, 8 o'clock, when I would be live. Yeah, that's good old London folks right there. 5:30, 6, 7:30, 8. Okay, so now it is 8 o'clock. Okay, and we look at what the market's doing. The market's very strongly bullish, right? Main swing, high, low, right? Price is trapped in between this high and this low. That's the main swing. Okay, so price is coming up here, failed to make a new structure high, made a new structure low. What's that telling you? Complex pullback, possible move back to the downside. The market's telling you that it wants to head lower, right? The market has made a lower high, so my expectation is what? A new structure low. Can't be anything else other than that, right? Yes, I only trade one pair for the whole session. Okay, we cannot expect anything other than a new structure low here, right? So, as you can see, I took a trade here to the short side. Okay, and I exited here because I had a hard 20 pip take profit. I remember that day because it hurt me, you know. I took my profit was taken there on a hard stop. I didn't get a chance to, I was talking to a friend of mine. I was trading with him live, and I did not get a chance to adjust it. Anyway, that was a situation there. So this was a teaching day that I was with someone live in the live market. So at any rate, I automatically took profit there. That was a entrance, exit. It's like 20 pips, yeah. I automatically set my trades for an automatic 10 pip loss and 20 pip stop loss, and I adjust my profit targets as the order flow happens. You know, I usually drag it down, way down, and adjust my profit for trailing. But in this case, I was talking and it just got hit. Nonetheless, I want to move to a day where it's not tainted by my arrows because I don't want it to be confused. So let's go back in time, or let me just turn off my live account here. So now you'll see no arrows. But that happened recently, so you might say, oh, maybe he remembered what happened that day because he traded it. So let me just go back in time to a random point. Okay, let's start there. Okay, so it's 6 o'clock, 6:37, 8. Okay, so here, get to my computer. Boom, turn on. This is what I see. I see the market is downward. That's simple. Now I find things up, make it easy for my eyes to see. Where's my main swing? Well, it's hard to say. I got a clear high here, clear low here, not a real correction, so I'm just going to use this one right here. I see that I have a new structure low. I expect a lower high structure somewhere in this area right here. I don't expect price to get past this. I don't have any clear structure here, so we'll see if price can get past that, show me any weakness to see if there's a opportunity to the downside. Well, there's an invitation there. Is my structure too close? Yes. Not worth the risk. Ooh. Okay. Now we get a strong decision to go up. Okay. Where's my structure? Here. Risk reward. Does it make any sense? No. Let that one go by too. What do I expect price to go to? I expect price to get into this area right here. Okay. Would I look for shorts in that area? Yes, if I see weakness, I will consider a short in that area, because now I've made 100% pullback, which tells me things are breaking down for the bears. Momentum has increased here, so although there is high risk there, I do have better room on the retest of these lows to get to a break even. Okay, so now as you can see, prices should have made a new structure low, wasn't able to. Made a weak new structure high, retested these lows. We knew we were going to get a new structure high in the short-term order flow. What does that tell us for a long-term order flow? Long-term order flow is here, right? This is the clearest high. This is the clearest low. Price needs to respect that if it's going to make a move. So now we'll see whether they're in the golden zone. Do we have any weakness there? No. Now we have this. Okay. Now, is this a good risk-reward profile for a trade to the downside? Should we be expecting a new structure low? Yes, 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 yes. No, no. Okay. Everybody says yes. Okay. Although we should be expecting a new structure low here, we can't overlook the fact that price made an overwhelmingly strong new structure high with huge projection on the short-term order flow. The price had 2 attempts to make a new structure low and was unable to do so. Okay, so although that would be our global expectation for the new structure low, we also have to understand that that may not be a possibility. And if you do take a short here, which I'm not against you taking, you have to understand that, you know, you have to be very careful and manage this thing aggressively. So your risk reward is great. You're only risking this much. Okay? But this trade is not a high probability trade. You have some things working against it. Your case for entering this trade is not that strong. It has some weaknesses. So understanding that, know that, you know, price needs to immediately continue onward. It shouldn't fart around or have difficulty into getting lows here. Okay? But let's take the trade. We entered here. Our risk is here. Our profit target is at the very least this round number here. Okay? Not because it's a round number, but because there's structure here. Short-term order flow. Confirms. Okay? Oh, were you saying where are we looking to take profit? Sorry. Got ahead of myself. Okay, 1-to-1 is there. How do we approach it? With strength, right? Stay in it, right? Invitation, right? This is your chance to either walk out with whatever profit you can there, or tying up your stop. You know, bring your stop to just above that. Okay, are you looking for any longs here? No. Why? Because of the round number, because you have structure. Even though you're expecting a fairly mid-sized pullback, you have elements against you that have you trading at an adverse risk reward. So you're not looking for any longs, you're in a bearish market. Okay, so going short here, the trade never went against you. You removed you moved to a break even here once price interacted with the bottom structure. Okay, because price could have found support here. Okay, so that's where you would have taken, that's where you would have protected your trade. Okay, so, and from a risk reward profile, you've already achieved a 1-to-1. Where are you likely? Where are your exhaustion points? I expect a 127 extension on a break of a low. I've always said that. That was achieved. Price immediately found some support. There wasn't any structure back there to think of. I can't see it, so I don't care. Now, do I need to scrunch my chart down to see if, 20 years ago there was structure there? No, because what does that say for this? Didn't price get through that? Yes. Shouldn't price now see this as resistance? Yes. Is it going to? It'll show us. Did price find support there? I mean, what structure here would you say is the strongest one? Is it that one? Is it this one? Is it this one? It doesn't matter. Price is going to tell you. Okay? Now, immediate structure, yes, it helps you make decisions, as I have shown you. So now, I would expect price to find exhaustion somewhere around here. Okay, price showed us that. Okay, we expect a pullback that's mid-size, right? At the very least, price should get here. Do you want to give all that profit back? Is price going to continue down? I don't know. That's a call that you would have to consult with your trade plan and with what you feel comfortable with. Okay, I would take profit here. Okay, I would take profit there because that candle is not normal for it to have shown up there. You shouldn't have that much strength and then that much opposing strength back to back like that. That's not what price should do. So anyway, I would take profit there. So entering there, I already achieved my expectation on this trade. Taking 19 pips from it. Price exceeded my expectation, got down there, came back, and I still exited right where the pattern would have completed. Okay, now what are you expecting? Well, you're expecting a mid-range pullback here. I see I have some structure here. I see that the next candle was bearish. Okay, so right now is price going up or going down? Well, so far it hasn't told me, other than there's an intent to correct here, and there should be enough strength to be able to correct here, or else the bulls would have not been able to, the bears would not have allowed that bull candle. Okay, so we need more information. Okay, in fact, the bulls are looking to correct here. How deep? Price will tell us. Not very deep at all. As you can see, we went from strength to no strength to we were able to hold the bears from falling, but we weren't able to take the bears higher, to it gapped higher, but bears were unable to, the bulls were unable to do anything, and this one gapped lower and closed lower. So we're still in a very bearish market here. Although the bears are a little weak, they're definitely stronger than the bulls, and we wouldn't expect a decent correction out of this as of yet. Y'all agree? Are you all starting to see how all of this gets tied together and how you use structure, order flow, and bar by bar to help us decide where price is going to turn, and then how the bar by bar confirms that turning point? Has this gotten a lot easier for you guys? And how you can identify, good trading opportunities without having to crunch down the chart, without having to draw a bunch of crazy things, without looking for guard leads or back. We're identifying high probability setups using harmonics, using order flow, using the tools that I have shown you. It really is this simple, guys. There's nothing complex. This is, to me, the easiest way to trade. Because you know exactly when you're wrong. You know exactly when you need to protect your trade. You know exactly what to expect. You know exactly where price should go to. You know when price is going to correct, because you see it. You see the weakness. You see the confirmation. You see the turning of from one side to the other. So the 2 minute, 3 minute, it doesn't matter. I could take a chart, okay, and block this out okay, and you have no idea whether you're looking at a 15-minute chart, a 2-hour chart, a monthly chart. Time is irrelevant. Okay, you need to trade the time frame that you feel comfortable processing the information. Do you have time to process the information on a 1-minute chart? Yes, great. Then trade the 1-minute chart. Do you have time to practice another thing? You may have difficulty, deciding between short-term and long-term order flow. It may confuse you a little bit. So pick a time frame that filters out, meaning a 5-minute chart or a 2-minute chart. This is a 2-minute chart. We can make accurate trading decisions in a time frame where all of the experts say is full of noise and it's untradeable and you can't do this and you can't do that. It's all BS. There's no such thing as noise. This is price action relevant to this time frame, 2-minute. 5-minute is the same. Okay. Now the higher in time frame you go, the bigger your risk, but also the bigger your reward, and the less frequency of trade you're going to have. No, there is no difference between trading a 1-minute or 2-minute or 3-minute or 5-minute. There is no difference. Okay? You can process the information accurately. Okay? If you can train your eyes to process the information properly, okay, then there is no difference. Okay? It doesn't matter. I want you guys to get that concept that there's too much noise on the lower time frames, or that you get higher quality signals on 1 hour because there's more information into that particular swing. Okay, it's not the case. I'm doing this accurately on a 2-minute chart. Okay, how many people do that? Is it because I'm better than anybody else? No, it's because I know how to read the chart. And once you learn how to read the chart, timing is irrelevant. The difference between the tick charts and the time charts is that the tick charts have a little better, the swings are, I'll show you. Hang on a second. Why did it change colors? Sometimes NinjaTrader does some pretty wacky stuff. All right. So the only difference for me, when it comes to tick data versus time data, to me, I think there's a little higher quality as far as just pure price action. There's no time limit to one candle, so you can see volume a little better. You can see the volume on the candle a little better. You can see who controlled that candle a little better, since there was no time involved in that candle. But I chose to do the 2-minute chart today because most of you don't have access to tick charts, don't have access to quality tick data. It's just fragmented because you're taking a MetaTrader time candle and it's being broken down to some sort of arithmetic formula to try to emulate a tick candle. It's inaccurate. It's inferior data. You should stick to your time-based charts unless you can get true tick data through a NinjaTrader or somewhere else. You can't open a trading demo account with any other partners that do from NinjaTrader, and you can use their data, but it's also demo data. I think that there's a difference between demo data and real data, all the brokers claim is the same data. It's not the same. It's not the same. But can it be done accurately with a time-based chart? Yes, I showed you today that it can be, and that's particularly why I used a 2-minute chart, because it most certainly can be done live. You know, this was today's chart. This is today's price action. We're live here. As you can see, you know, we didn't trade this market because this market is not really going anywhere. We were a lot more productive doing the simulated data. I would like to arrange one of these again during a day that it's regular, so that we can do some live trading when the market is, you know, more in tune. This time of year is just, it's not worth trading. That's why I don't trade it. But maybe I can set one of these up sometime mid-January or February. Maybe by then we could have figured out a way to you know, work something out where this is something that we can all chip into, and I can, you know, do maybe a week of live trading for, you know, everybody who wants to join, you know. Not so you guys can copy my trades, but so that you guys can learn, you know. But I think that, you know, we're approaching 12 o'clock here, and I hope this was great for you guys. I want to get back to my family. I'll edit this video later and see how I can post this, probably in 2 or 3 parts, or all, see if it'll let me do it all. I'll do it all. But I hope this had value. I know that we probably have some things that we didn't cover, but I wanted you to see that the approach is not difficult, and that we always trade with expectations, and you should always know what those expectations are. And that, again, there's nothing difficult about what I do or my approach, and you know, it's about keeping it simple, but keeping it consistently simple and consistently profitable. And I think that I have achieved that. Today is showing you guys how simple it can be, and how you don't need to complicate yourself looking at, you know, all of this history, all of this, you know, just what you can see on the chart is enough. What you can see in front of you is enough. Your expectation is enough. You know, here, new structure low. What did we expect? New structure low. We expect a lower high. Did you get that? No, you got a very weak new structure high. What do you expect? Well, you expect a deep correction, possible another test of these highs, right? You got a deep correction, and now a retest of this highs. You got that. Now you're expecting here. From here, you're expecting a new structure low. How likely are you to achieve that? Look at the weakness here. Okay, look at the strength here. Okay, what are you likely to achieve? A new structure high. What should be your expectation? Well, my expectation is, well, although I expect a new structure low, I see that that is probably an unlikely scenario, and that I am likely to see a retest of these highs or a new structure highs before I can see a new structure low. Can you see that? Okay, so until this low is broken or this high is broken, you're going nowhere. Price is just moving sideways. Okay, before price speaks to us again, you know, it has to break this high or this low. What is the expectation? Well, technically I expect a new structure low, but how likely is that to happen? Very unlikely, right? But that is my expectation. What am I likely to see? Well, because of the weakness here and because of the structure here, I'm likely to see price try to retest these highs, right? Why? Because I had a lot greater momentum here than I have here, right? Weakness coming down. You know, price doesn't like weakness. We trade against it. So what are you looking for? You're looking for longs somewhere into this area here, okay? Because price has consistently bounced off of these areas. You have a higher chance of looking for a long here, and if you were short here for a reason, you would be looking to protect your trade here. Why? Because now you have a lot of weakness. It's that simple, guys. There's nothing subjective about it. There's nothing that you need to be some sort of, you know, extraterrestrial or any kind of special intelligence to do. It's just common sense, path of least resistance structure, order flow, and expectations. Well, once I learned how to read the chart, results came right away. Okay, once I started to understand where price should be and shouldn't be, my trading made a huge turning point. I came from the same areas that you guys came from. I was an indicator trader. I was a trying to figure it out trader. I tried many things, okay, but nothing, okay, spoke to me clearer than out of frustration one day just erasing all of my indicators and trying to figure out, how to read the chart. I read many books. I read many courses. The one course that I would say helped me the most, as far as understanding order flow, was YTC. It's by this guy. What's his name? Your Trading Coach. He's an Australian trader. He doesn't believe in Fibonacci's or harmonics or any of that nature. He does use some moving averages, but I learned the most from him as far as how to read order flow and structure. I learned a lot from him on that. Lance Bex, that's the guy. Your YTC, Your Trading Coach. YTC, Your Trading Coach. His course is relatively cheap. It's very in depth. Again, it's like every course, guys. I've read many courses, taken lots of courses. A lot of them were junk. Some of them had some golden nuggets. I took the information and I made it my own, and that's the takeaway from this. You don't need to trade exactly how I trade, but if you can take something that I do that makes life easier for me and you can incorporate it into what makes sense to you and your approach, then you've succeeded. I am not a fan though of adding processes to your process. I think you need to stay efficient. You're trading a very efficient market. Your process needs to be efficient. Okay? I see all of these traders and scalpers on these threads, and it makes me laugh sometimes because they're trading a 1 minute chart. They call themselves scalpers, but they're waiting for 4 or 5 indicators to line up to take a decision. By the time that happens, your move ended. You're done. You're finished. Okay? So, keep it simple. Learn to read the charts. Do exercises like this, move price back. You can do that on NinjaTrader, fantastic, because you can create a margin here, stick as you want it, where the price action in front of you is hidden, and say, what do I expect? Okay, what do I expect next? Okay, and do that from a candle perspective. You can do that from a candle perspective. Let me go back in time. Okay, let's move price down. You can say, okay, bar to bar, what do I expect? Well, I expect the bulls to be able to produce another bullish candle here. Now I see that the bears took over. Okay, I've made a lower high. What do I expect? I expect price has made a new structure high followed by a higher low. I expect this high to be tested. Okay, from a bar to bar perspective, I see that the bears are in control now. They've taken back more than half of this, so I expect the bears to be able to produce another candle here. Okay, and they did. So now I expect what? Compare this candle to the previous candle. What does that tell you? Less volume. Okay, less volume. Okay, the candle closed with no rejection whatsoever. It was not able to close below this. There's a little bit of weakness there, but what do you expect? A bear candle. You got an indecision candle. Okay, candle with no tails, higher or lower, and you got wasn't able to trade higher, wasn't able to trade lower. What does that tell you? It tells you that this is an area where the next candle could be bullish. You could expect the bulls to be able to enter here in line with the expectations, because you are expecting these highs to be tested, right? You're expecting these highs to be tested, if not broken. Expectations a new structure high. At the very least, your expectation should be that these highs be tested. We had come up weakness, come up strength, a little bit of weakness here. Now you expect the bulls to be able to show intent. If they're able to achieve this, they cannot let the bears close below this, right? The bears cannot do this. The bulls cannot allow the bears to close below that. So this is an area where you could expect some bulls to enter the market with another indecision candle. What does that tell you? That the bears are weak, but the bulls are also equally weak, because that was their invitation to buy here. So if the bulls do not produce a bull candle here, then we can only expect for the bears to take price a little lower. Now the next candle, what happened? The bears were able to push the candle lower. Okay, we have our third indecision candle, which means catastrophic weakness on both sides. However, okay, the bulls were able to push back the bears on an attempt to take price lower. So if the bulls do not produce the next candle here, then they're finished. Okay, so we knew that the bulls, this was an act of desperation for them. This was where they needed to enter the market. So we knew we had a higher chance of a bull candle there than a bearish candle, because they're desperate. They know what they need to do. On a 2-minute chart, okay, in the middle of the day here, we know from a candle to candle perspective which candles are desperate for who. Okay, how powerful is that? Okay, and now we know that when we compare this candle to this candle and the previous candle, we know that the next candle should be what? Bullish or bearish? What about finding a setup on bigger time frame and scaling in for entry as bigger time frame triumphs lower? You know, that is something that you're going to need to decide what kind of trader you want to be. If you're going to be a position trader and you're going to be in these trades and be exposed to the market, 24 hours a day, that's fine. You can trade the larger time frame. If you're going to be a position trader, absolutely, I would say your analysis is done on the bigger time frames. You definitely want to scale down to get better entrances. But your trading time frame should be the time frame that you're looking to trade. So if you're an intraday trader, you shouldn't be trading anything higher than a 5-minute chart. If you're a swing trader and you want to be into these trades, a couple of days to a couple of weeks, I would say 15-minute and above. And yes, and if you're trading the 15-minute or above, yeah, you can definitely scale down to a 10-minute, 5-minute chart to pinpoint your entry. I wouldn't manage it on that time. I think you need to manage your trade on the time frame that you're trading. But I don't complicate my lives with with that. I see what I need to see on one chart, and I don't need to scale down to get a better entrance. My entrance is good enough. Okay, most of you said bullish. See, how do we know that? Okay, now I'll ask you another question. Next candle, compare these two candles together. What kind of candle are we going to get next? Okay, now did we get a bullish candle? No. Okay, but what happened here? Okay, we did get the bulls to try to trade higher, so we were right. Now this candle closed bearish, but it closed at 50% of its strength, right? That means that it didn't close at its lowest point here, and overall it's only wiped out 1/3 of the previous candle. So overall we're still bullish here. Okay, we can't expect that the next candle is going to be bearish, and we can't rule out the fact that it could be bullish. Okay, but we do have enough information to say here that we were expecting a bull candle. We didn't get one, so the bulls are weaker than they should be, right? The bias is still bullish, right? But we cannot rule out the fact that the bears could produce here a bearish candle. Okay, see, this is not hard, guys. The information is there. How powerful is it that on a 2-minute chart, okay, you're able to know what kind of candle comes next, what kind of candle you should expect next. Okay, how much value is there in that information when you're managing your trade and you expect a strong bull candle and you get a weak piece of crap bearish candle, right? Or when you're expecting a strong bullish candle and you get a very strong bearish candle. How powerful is that to know that? Okay, yes, it's all the same on any time frame. What's the difference between a 2-minute candle and a 4-minute candle? It still has a high, a low, and a close. And an open. Okay? What do we expect here? Do we expect a bearish candle next or a bullish candle? we got a bearish candle, right? You were correct to assume a bullish candle. But now that you got this, how much information in there? How does that help you? What are you saying now? Oh my God, the bears now intend to correct, and we expect what? A deep correction. Why? Because we have very weak projection here, right? So if I'm managing this trade and I'm long here, I know that we're gonna get a deep correction here, but we should not get close past this, right? Ooh, that candle is very strong. Okay, has more volume than the previous one. Okay, close at its lowest point. Okay, what does that tell you? It tells you I'm in trouble, right? It tells you that I expect what? My next candle to be bearish. Okay, now I got that bearish candle. I know that the bulls should not close below, the bulls cannot allow the bearish gate closes. I expect another bearish candle, but I cannot rule out the fact that this is an area where the bulls are desperate and need to hold on to this. So can't rule out the fact that I'm going to get either an indecision candle here, a weak bearish candle here, or a weak bullish candle. I should not get a strong bearish candle here. Okay, and I got all of the above. I got a gap up, okay, because the candle opened here. You know, I traded a candle that closed at these lows, okay, but it was all bears, right? So what does that tell me? It tells me that this low's in trouble. It tells me that we're likely to get another bearish candle to close below these and these lows, okay? And now we're likely going to achieve a new structural low below this level. I'm getting all that information from that one candle because I'm considering the context of what's happening, okay? See? I knew that ahead of time. Okay? It's okay to be wrong on a candle, but then when you consider the context of what's happening, what that candle tells you in relation to the previous one, you get a very clear picture of what's happening, a very clear picture of where price is going. And that is gold. That is your ability to print money at will when you can process information. I got to run too. It was fun working with you guys and talking to you guys. Post comments on the thread, if you can, as to the experience, whether it sucked, whether it was great, whether it had value, what you would like to see different, because that's that's me being able to do another one of these in the future and target other areas. So be honest, critique it on the thread, because I do read it and it helps me decide. Okay, thanks again for you guys for everything. I really enjoy teaching. Just sometimes timing is not great and I do have a lot of responsibilities, but thank you guys, and I'm signing off now.